We are doing well by God's grace.
We thank God. We are met again. I'm sure in the same group I handle for course and manual accounting too.
Yes, Doc.
Yes, we have met again for public sector accounting. But with your course and management accounting, I have finished marking, submitted the scores there, and my expectation was not met at all, because though sometimes the network disturbs, but some few of you exhibit some kind of performance which made me doubt whether you were attending classes, because even break-even point definition, some people could not state it. Almost all the questions, some of them we have given to you as tutorial questions. Some of them I have even solved and sent to you on a platform. But still, your performance was not up to expectation at all. Anyway, we have met again for course and manual public sector accounting. I'm expecting that this time you will sit up. It is not easy combining studies with work and family as well. But that's what you have chosen to do. So you must live up to expectation, right? Because after you have gotten these certificates, you cannot explain to anybody anywhere if you have gotten a pass or you have gotten a third class or whatever class. You can go and explain to the person that, oh, I am very good, but just that when I was in this program, I was this, and that. No. Whatever level or whatever class you get will define who you are. And that is how people are going to judge you. And don't think that because you're on distance education, distance program, you should be given some kind of this. If even you don't learn, you don't have knowledge at all, we should just give you grades. So you should sit up, because note you have paid money and you yourself know why you want to do this program. You are not just coming to do this program because others are doing, but because you want to now move from basic school to secondary school and then go and teach there. When you go to the secondary school, you are unable to teach the courses that you think you yourself said you have mastered in it, then that's going to be a problem, and it means we have not trained you well. So before we start today's classes, I am telling you that your performance in course and management accounting was not up to my expectation. Though I don't know whether anybody will feel, because the least person had 20 out of 60. The majority of you had 28, 29, 30, 28, 29, 30. Only one person had 44. And another person too had 42, 41 or so. So it wasn't encouraging. I was expecting you getting A. Many of you getting 60, 50 something, 40 and that, because I have sent you the questions. I've told you that the questions are coming from the ones I've sent you. And the questions all came from the ones I've sent you. Even those questions that I brought, after going through the materials with you, we discussed how you can go about it. If you are going through your private study and you have not understood it, you don't know how to go about it, you call so that you can get the address. You just prepare that way and you went for the examination. And the performance, like I'm saying, of course, maybe I am the teacher, so I think you could have done so much, but it wasn't up to my expectation. Right. Now we are going to do another subject, public sector accounting, but the nature of the course involves a lot, and you are supposed to be giving the model for it. I don't know if you have them. Do you have them? Do you have the model? Hello, class.
No, please, Doc. We are waiting for it.
We don't have it. Okay. Then I will send it to you. I will send it to you, the soft copy, because it's a soft copy that that I can send to you. But if you want the hard copy, you can go to your centers and then get the hard copy. All right. I don't know whether if you are given that opportunity, but if not, so that is the issue. So quickly, we are going to project and then start our discussion. But if you have any question regarding what we did, cost and manual accounting, certain things didn't go well, you think that this new course, we should change, you can tell me. And the first time a lecturer handles a class, you have to introduce yourself. But because I have handled you the same, another course somewhere, I believe that you know me, you know my name, you know what I stand for. But if you have forgotten them, let me just remind you, I am Dr. Tahil Ahmed Anzi, currently with the Department of Business and Social Science Education. I was formerly the regional resident tutor for Code Distance Education, Northern Region. Then I came to the department somewhere 2019. Since I came to the department, I have been teaching cost and management, cost accounting, management accounting, financial accounting, fundamentals of accounting. For code, I have taught so many courses there, including cost and management accounting 1 and 2, advanced accounting, principles of accounting 1 and 2. I've been handling corporate sector accounting, corporate financial reporting, and a number of them. As my background, as I told you last time, I have O-level, A-level, all in business. Then I did HND, accounting, first degree, become second degree. I did finance, income finance, and I have done PhD accounting education, and I chartered as a chartered accountant somewhere 2015. Though I plan to teach work in the industry, but I've been teacher throughout. So going through this topic, subject with you won't be a problem, except that this is an advanced teaching. There are certain areas you have to also bring your ideas and your concerns and let the class be lively, right? Gifty, I've seen you. Are you there?
I'm here.
Okay, that's very good. Right, so let me just project and then we go through what we are going to do. So I'm looking for where that particular material is. Switch. Uh, okay. Hello, I'm coming in. Reese, I'm looking for the material where it is. It's not open, that is why. Please, can you see the screen? Hello?
Yes, please.
Yeah, so we are going to go through public sector accounting. Now, what comes to mind when you hear or we talk of public sector accounting? I believe you have heard of public sector accounting before. At least you have heard public sector. You know what is public sector. So what is public sector accounting? Any idea? You know what is public sector, you know what accounting is. So when we say public sector accounting, what do you think it is? Any contribution? Hello, let's hurry up, please. Hello, my student, are you there? Hello?
Hello, Doc.
Yes, please.
What I can say is that it has to do with accounting for public institutions.
Good. Right? It's okay. Any other idea? Because basically, if private sector accounting is accounting for the various corporate bodies that are not government of nature, then private sector accounting definitely is accounting for the public sector. So it is the accounting system that is applied in the public sector in keeping records of their financial transaction and preparation of their financial accounts. So we are going to see what rules, because there are some similarities and differences between public sector accounting and the private sector accounting. the principles of accounting and accounting that we have done basically is more or less accounting for the private sector, corporations, the corporate account, and then the accounting principles. Those are for private organizations or private institutions. But when it comes to public sector, they also prepare their accounts, but the rules and regulations governing the way their account might be prepared is a bit different from the public sector. Even though standards are followed, principles that we use in preparing financial statement are followed, but there are some differences in there. So that is what we are going to learn. You must actually understand private sector accounting, the accounting that you know very well, principles accounting you know very well, to be able to understand the public sector accounting very, very, very well. So your knowledge in accounting generally is very important here for you to understand this. Right. So let us go on. For every subject, you might be given the course outline. But for code models, the course outlines are already in the model itself. So the book generally gives you the course outline. I think there's some problem somewhere because it is not, because it's now loading. So some of the things are not coming very well. All right, so let us allow it to load. I think I was rushing it. Yeah. So, okay, so now I think yeah, so the first unit you are going to go through today, and probably about 2-3 units today, is going to cover overview and regulatory framework of public sector accounting. Just as I said, financial accounting is almost the same in both public and private. However, the regulations that we have in the private sector sometimes is a bit different from that of the public sector. Okay, remember that we said accounting is a subject of law, and so or rules. So we have regulatory framework for accounting, and this regulatory framework includes the ISB conceptual framework, and then the regulatory framework, and then the ethical framework. These things are all done here. When it comes to the regulatory framework, we are talking of the various principles, concepts, and postulates that governs the recording and preparation of financial statements, including rules and regulations, both international and local, right? The same thing here. So the first topic we are going to go through is the overview and regulatory framework of public sector accounting. So here we are going to look at the meaning, the scope, and objectives of public sector institutions. We look at the differences and similarities of private and public sector institutions and their accounting system. So we look at the institutions. What do we mean by public sector institution, private sector institution? What are the differences? What are the similarities? And then we look at the accounting for the private sector and public sector similarities and differences. Then we'll also look at conceptual framework of financial reporting in the public sector. Remember that we said in the financial accounting, we have the ISB conceptual framework, which governs the recording and preparation of financial statements. Now, we also have international standard that governs the preparation of the public sector accounting, and they also have conceptual framework. Most of the content of the ISB conceptual framework and then International Public Sector Accounting Standard conceptual framework are similar, except that the way the transactions are treated has been reflected in the conceptual framework. Also, we're going to look at the conceptual framework of financial reporting in the public sector. So we will look at the qualitative characteristics of public sector financial reporting. As for the qualitative characteristics, it's almost the same in the private sector and public sector. They are all financial statement or financial report. In every financial statement or financial report must have some qualitative characteristics, and these are almost the same. Then we'll also look at the conceptual framework. Here, we'll look at the element of public sector financial statement. In the conceptual framework, we talked about the element of financial statement. And in the private sector, you know, there are the 5 elements: the asset, liability, capital, revenue or income, and expenses. Now, when it comes to the public sector, these elements are a bit different, quite different from that of the private sector. So we're going to learn that and how this element can be measured, measurement of this element of the financial statement. Then we'll look at the overview of the regulatory framework of public sector accounting, the various laws and regulations that governs the preparation, recording and preparation of public sector accounting. That is the regulatory framework. We might have even talked about some of them earlier. So that is about Unit 1. So that is the first topic we are going to do. Then after that, oh, what is this happening? Oh. Is so the various sessions, if you get the book, you will see the various sessions. So I think okay, fine. The way the material is doing is becoming a problem. So let me just start. As we go through unit 2, I will explain to you what the sessions are also about. Okay, so we are talking about session 1. What is about the meaning scope, and objectives of public sector institutions. Like, as we rightly said, that the public sector accounting definitely is the accounting system employed by the public sector institutions. The definition as given by your model says that generally, public sector, so we are talking of the definition and meaning of public sector institution. So generally, public sector is considered to be the section of an economic system which means the economic system is the means by which countries and governments distribute resources and trade in goods and services. So when we say economic system, it is a means by which the countries and government, distribute resources and trade in goods and services. So the distribution of resources by the country or the government and how government do business in terms of trading and provision of services is what we call the economy. Okay, so economic system. So general public sector is considered to be that section of the economic system. And so if you look at the Ghana economic system, is the economic system which is the interplay of the government institutions or private institutions and then individual households. All these things makes up the economic system. So when we say public sector, it is considered to be the section of the economic system by which countries and governments, the economic system controlled by the national, state, or provincial and the local government. So the part of the economic system of a country that is controlled by a state or a national or regional or local government is what they call the public sector. So simply define public sector as part of the economic system that is controlled by the states or the national economy or the national, regional, or the local level. So, if you talk of government institution, we have the national government, the regional government, and local government. So regional, local, and national. All institutions or all the part of that economic system, economic system that is controlled by these levels of government is what we refer to as the public sector. So public sector includes the national government, the regional government, and the local government. Whatever they control in the economy is what makes up the public sector. I hope you have understood it. So, in other words, we can define public sector to refer to the national government, the regional government, which is made up of the states, the provincial or territorial government, and the local government, which is made up of all city and town councils. So all that we are saying is that if you go to some other countries, the national is actually made up of states. For example, if you go to Nigeria, because they are practicing federal system of governance, the national government is made up of the federal states. Okay. Some other places, instead of saying regional, we call them provincial. Other, we call it territorial. So in Ghana, we are talking of the national government, which is made up of the president, the seat of the presidency, and the cabinet members and all that, the national government. And then the regional government, the regional council or the regional administration of the country. That's when you go to this central regional RCC. You said that regional coordinating council, and then we have the local councils and the local government, which is made up of the municipality or is it MMDs? We call them MMDs. That is metropolitan, municipal, and district assemblies. Okay, so the public sector is that part of the economic system that is controlled by the national government, the regional government, and the local government. And I've explained what we mean by the national government. That is the government of the presidency, that is the cabinet members and the president, that is executive council, executive members, the ministers, and all that. and then even parliaments, the three arms of government, which makes up the national government, and then we have the regional coordinating council, and then the local government, which is the MMDAs, right? So that is made up of the national government. That is public sector. So this section could be fully funded by the states to provide non-profit services to the entire economy, or partly financed by the state to provide services for profit. So these government institutions or public sector institutions could be fully financed by the government of the country, or they may be partially financed. Those who are fully financed by the government are to provide essential services for the citizens of the country. Okay, those that are partly financed are mostly financed to provide services for profit. So we have public corporations that are under public sector public sector institutions, but they are those set up by government, but partly financed by their internally generated funds through their profit. And then we have some other institutions that are fully financed by the government for them to provide certain services. For example, the ministries, departments, and agencies, which are supposed to provide certain services to the people of the country, and they are fully financed by the government. So these are public sector, what we mean by public sector. So public sector institutions are institutions that are to provide, that are. So let's go on. In Ghana, the public sector includes the central government, which I've said, the national government here will mean the central government, which is made up of the ministry, department, and agencies. So the central government here, which is the national government, okay, is made up of the ministries, department, and agencies. So the various cabinet ministers, okay, and their agencies. Under various ministries, we have departments and agencies, right? That is the central government. So that is for Ghana public sector. It includes first the central government, which is made up of the ministries, departments, and agencies. We call them MDAs. Then the local government, like the metropolitan assemblies. You remember that the ministries, sometimes the central government includes some of the regional administration, because for the various regional there are also regional ministers appointed by government and which are part of the government ministerial central government. So that's why in the discussion we are saying that in Ghana the public sector is made up of the central government, which is made up of the ministries, departments, and agencies, and then the local unit or the local government, like the metropolitan, which is made up of over 250,000 people. So this is trying to explain to you the difference between the metropolitan assembly, the municipal assembly, and this is assembly. How do we call a particular district or a particular local government a metropolitan assembly, and why do we call some municipal assembly, and why do we call some district assembly? Okay, it depends on the number of people residing in that particular local authority, right? So the local government units, which is made up of one metropolitan assembly that has the population of over 250,000. Then municipal assembly that has a population of 95,000 and over. So the minimum to become metropolitan municipal assembly is supposed to be 95,000, up to somewhere below 250,000. Then this assembly is people population of 75 up to somewhere 60, 69, 59, because you can see where the levels are. So if a local government is made up of a population of 75,000 and over, up to somewhere 94, 90 something, we'll call that one district assembly. But once it is over 95,000, then it will be considered as a metropolitan assembly. And then when it is over 250,000, then that will be metropolitan assembly. So look at the number that actually classify the district assembly into metropolitan, municipal, and district assembly, right? So this explains why maybe Accra can be considered as metropolitan assembly because of the number of people. If you go to a particular district at northern region, the land size can be so much that because of the number of people residing there, we'll classify that one as a district assembly rather than to call it metropolitan assembly. So once a city qualifies to be has a residence of over 50,000, 250,000, then it qualifies to be classified as a metropolitan assembly. When it is 95 and above, 95,000 above, then it classified to be called metropolitan. By anything below that, it will be called district assembly. So public sector, it also includes public educational institutions. When we talk of the public sector in Ghana, it also includes public educational institutions and quasi-government institutions like public board and corporations. So institutions like the University of Cape Coast, University of Ghana, University of Nkrumah, University of Technology, University of Development City, those traditional universities that are public funded, that is public institutions, are also classified as part of the public sector in Ghana. Then we have also some quasi-government institutions, like some government institutions that are set up by government but are financed through their operations, including public boards and corporations. The list of ministries in Ghana as at 2017, when this book was done, were the Ministry of Finance, Trade and Industry, Defense, Interior, Office of the Attorney General, and Ministry of Justice, Energy and Petroleum, Foreign Affairs, Food, and so these are the various ministries that makes up the central government during the 2017 year when this book was written. Currently, our government promised of a lean government, and therefore will appoint only 60 ministries. Some of the ministries have been merged and headed by a minister. So currently, our government has appointed how many ministers you can search. Know that you are a public sector accounting student. You need to use your computers on your phones to now learn. So you can look at the current ministries we have in Ghana now, as at now, because this one is 2017. Currently, you should be able to know the various ministries that we have currently, right? So you can go through that one. For instance,
Yeah, Doc.
yes, please.
Yes, please. I want to ask a question. So, in case there has been a question about how many ministries is Ghana currently having, are we going to use the one in the slides, or we will use the one we will be searching on?
You are saying, the question you are asking is that how many ministries is Ghana having currently? That information in the book is for 2017. Is that not it?
Yes, please.
So if the question is asking you to mention the number of this in currently, would you say 20, what do you call it, what we have there? So you need to know, it's a current affairs question. And these current affairs we all have to learn. So you can quickly find out from, the president actually promised of a lane government and promised to appoint 60, that he's not going to exceed 60 ministers. If that is the case, then we are going to have 60 ministries now. I don't know whether that is what he has done. You can check. So that's what I'm saying. You have to. Is that right?
Yes, please, Doc.
Yes. So he said, for instance, one department under the Ministry of Finance is the Controller Account. So the ministries we are talking about, apart from the ministries, we have, the ministry is made up of the departments and agencies. Okay, so we can have department and agencies under each of the ministries. We can have department and agencies under each of the ministries. So that's why we call it MDA, Ministries, Department, and Agencies. That makes up the central government. So we are saying that department and agencies that comes under some of these ministries may include, for example, Ghana. For example, or for instance, one department under the Ministry of Finance is the Controller and Accountant General's department. So you see, Controller and Accountant General is a department, but it's part of the central government, but it's under the Ministry of Finance. Whilst whilst the agencies in the same ministry include Securities and Exchange Commission and Institute of Accounting Training and Bank of Ghana. These are agencies, but they are also under the same Ministry of Finance. What is and so this the Securities and Exchange Commission and then Accounting Training and Bank of Ghana, which they are agencies that are under the Ministry of Finance. So currently we have 216 district assemblies, metropolitan and municipal, and these assemblies. Okay, so we have, that's at, it currently means that as at 2017, we had 216 MMDAs. No, sorry, MMA, MMD, yes, metropolitan, municipal, and these assemblies. So as at 2017, Ghana have total of 216 these assemblies. Currently, it might be more than that because some of this assembly has been divided, have been split, just like the regions have been split. Some of the regions, we used to have 10 regions. Now we have 16 regions. So this assembly, so some of them have been split into the various districts. So, for example, Cape Coast, for example, we're having Cape Coast Municipal Assembly, but now we have Cape Coast North and Cape Coast South, right? So this is the reason. So we need to also currently can search for the current, this is metropolitan and these assemblies that Ghana has now. One important institution or part of the public sector is the government business entities. These are the quasi-government institutions that are financed by the government but are given the freedom to operate on their own. So it is important that you have information about the GBEs, that is government business entities. These are the corporations that the government of Ghana has set up to provide certain essential services, but are allowed to operate on their own to generate revenue to finance the operations. So the public sector also includes, like I said, it includes the central government, the local government, and the public institutions like the public educational institutions, and then some quasi government institutions and corporations. And the corporations here includes those that are classified under government business entities. So we are saying that the government business entity, these are profit-making entities with some minor community service obligation. Okay, so the public sector of Ghana also includes government business enterprises or government business entities. You can either call it government business enterprises or government business entities. Generally, these government business entities are entities, or they are entities that are profit-making entities with some minor government, some minor communities service obligation. These enterprises are, or these entities have the following characteristics. So what we are saying is that government business entities or enterprises are those government entities or enterprises that have been set up by the government to operate for profit with minor government, with minor community service obligation. You see, they are profit-making entities, but because government of the country thinks that if these kind of businesses are left wholly in the hands of the private people, the citizens will be exploited. So the government set up this private sector or these government business entities to provide those services for the people for profit. However, it has some minimal community services in their operation. So therefore, they may not are operating for profit, but their sole aim may not necessarily just to charge realistic prices. Example of these government business entities includes Ghana Water Company, the Electricity Company of Ghana, Ghana Commercial Bank Limited, National Investment Bank. You know, these are government institutions. They are financed by the Act of Parliament, but they are made to operate on their own, generate revenue, profit to finance their operations. So apart from their initial investment, their operations are not financed wholly by government. Maybe they may be financed partially to bring them up somewhere, but they are supposed to operate for profit. The reason why government comes out with these institutions is that these areas that these corporations are providing services are very crucial for the survival of the people of the country. And if left in the hands of private, they may be exploited. For example, banking. If there's no government institutions in the banking sector, for example, Agric Bank, they are supposed to actually, how many of the private institutions or private banking institutions will give loans to farmers in this country, if not government coming in to set up agricultural development bank? Okay, investment. We want to, help set up businesses to invest. To do business. How are they going to get funds to finance their operations? Okay, if these are left in the hands of the private people, they may only give loans to well-established firms, and so startups may have problems. That's why the National Investment Bank is there to help startup businesses to also seek for funds, government in support them. Then water. Water is a very essential services for the survival of people. You all know water is life. Okay, so if the water provision is left in the hands of private individuals, what do you think will happen? We may buy one bucket of water, so much of money. Okay, so public water company comes in to provide their services at an affordable price, though they have to meet their operations and then finance their operations. Therefore, they must actually sometimes increase their prices to meet their current operation costs. Then, Electricity Company of Ghana, electricity. If we don't have light in our villages, see how we suffer. How can businesses thrive without light? But if this light is solely in the hands of private institutions, you can see how much exorbitant prices could be. So the reasons for setting up these public sector institutions are clear, but they are given autonomy to operate for themselves. So let us look at some characteristics that these corporate government business entities have. This can come in your examination, so take note. So we are saying that these public government business institutions have been set up, have the following characteristics. One, it has the power to contract in its own name. Though it is government, but it is a legal entity, and therefore the characteristics of public business entity is that, or the government business entity is that they have the power to contract in its own name. Remember, if you have done legal entity issue, you know what is this. So every public entity or every government business entity is a public corporation, and therefore it's a legal entity, and so has the power to contract in its own name, not in the name of the government. They have been assigned the financial and operational authority to carry on business. So when government set up these kind of corporations, they are given the financial and operational authority to carry on business. It means that they are given the power to manage their funds from their operations and to finance their operations. They are no more going to be funded by government fully. They are supposed to generate profit to finance the operations. Okay, so that is public corporations. Some of these public corporations that were set up during our former president, Dr. Kwame Nkrumah, was not able to operate fully, and they have to be diversified. Okay, but they have been given, when it's set up, they are given, the charter gives them that financial and operational authority to carry on business on their own. So this company, because they have been given operational, financial and operational authority to carry on their business, they sell goods and services in their normal course of business, to other entities at a profit or full cost recovery. So because they are supposed to operate to manage their own funds, they sell goods and services in the normal course of business. So they sell the goods to any customer, both local and international, at a full cost or at a profit or at a full cost recovery. It is not reliant on continuing government funding to be going concern. So such government business entities do not rely on government financing to continue to do business. They are supposed to generate revenue, incur expenses, make profit, and invest the profit in their business for expansion. So they do not rely on government funding to be going concern. Initial setup may be by the government, that is the act of parliament, but their continuous operation, their going concern depends on how they manage their funds and their business. Then the last one is that it is controlled by a public sector entity. Of course, it is a government institution, so it is part of the public sector. Therefore, it is controlled by public sector entity. For example, if it comes to the what do you call it? Utility companies, or the utility, like the electricity, water, and this, they are under the PURC, that is Public Utility Regulation Commission. Public Utility Regulation Commission, that's the PURC. all those government institutions, government business entities that are operating, providing services are governed by the PURC, which is a government institution. So we are saying that some of these public corporations are controlled by the public, what do you call it, sector institution. For example, commercial bank is under the central bank. And so that is also a public institution. Example of the government business enterprises in Ghana includes the Ghana what I've mentioned already. So please take note of the characteristics of the government business entities. Even though recent development in the global economy makes it difficult for certain products and services to be solely assigned to the public sector, the sector is common in certain areas. The public sector provides goods and services in areas of water, power, education, health, security, environmental protection, law and order, etc. Privatization of state-owned enterprises can change nature of service from public to private. Okay. So even though it is uncommon, the state sometimes take over certain services, especially in the area of education and health, provided by the private sector. Again, the state may also decide to outsource the provision of certain services like sanitation, etc. Thus, the nature of the public sector is dynamic. So all that we are saying is that sometimes institutions that are set up as public institutions can be privatized. Okay, can be sold to the private individual, then it can now become private institution. For example, during President Nkrumah's time, so many institutions were set up. Later, President Rawlings came to privatize some of those institutions. Okay, that is, government sold its share in them and then privatized it completely. Example is the Ghana Telecoms, which was privatized by President Kufuor. Okay, there are some companies that were set up, fruit juice company that were set up but later were privatized. Certain state farms were privatized during the President Rawlings time. So government set up public businesses can be privatized when especially the management of it is not going well. When we are saying that if the private sector does not come in, the people managing the public sector may just collapse the business, may not be able to operate for profit, and they may not ensure going concern of such businesses. So the government may otherwise want to privatize them. Sometimes the government may also take up some private institutions as public. For example, in schools, some people set up private schools and then government may later absorb it as a public school. Okay. Some people set up private hospitals, but because of the strategic nature of that particular hospital and where it's serving, government might come in to, absorb it as a public hospital. Okay, certain public services can also be outsourced to other people. So this makes the public sector very dynamic. So that's what we are saying. Now, let's look at the objectives of the public sector. Why is the public sector organizations set up? I have mentioned some of them in our discussion, but let us look at specifically why the public organizations are there. That is objectives of the public sector organizations. The reasons for setting up public sector organizations are varied, and they include the following. One, it facilitates establishment of the public sector organizations, facilitate proper administration of state business. The government has its business to operate. Okay, government has certain services to provide to the citizenry. Government has to actually administer its mandate through provision of services, ensuring peace and security, so many other services. Now, these government business must be carried through some institutions. So the reason is that the establishment of the public sector organization, one, facilitate proper administration of the government business. For example, if you look at the establishment of the District Assembly, Regional Administration, and these ministries, they are supposed to carry government business. So governance of a nation is complex. It's not very easy at all. Those who have gotten the chance to become presidents, they are not feeling it easy. Sometimes when we sit back, we criticize them anyhow, but it is not very easy to govern the whole country. In order for the government to discharge its responsibility well, there should be an appropriate state structure that should facilitate the government delivery of its mandate. The public sector provides this needed support through the central government and the local government. So the reason why these central government institutions and local government institutions are set up is to facilitate the proper administration of government business, because government has to carry on its mandate in terms of provision of services and then discharge, providing security and order and all that, provision of water and all those things. There should be institutions that can carry on these government functions or business or mandates to the people. So that is why it is set up. Okay, facilitate proper administration of state business. The next objective for setting up public sector organization is the provision. It provides vital services to the state. For provision of vital services to the state, we are talking of vital services, very essential services, services that when left in the hands of the private, the citizens may be exploited excessively. Okay, so provision of vital services, or it provide vital services. Some important products and services cannot be left in the hands of the private sector. Take note of this. Some essential services to the citizens of the country cannot be left in the hands of the private sector, because the private sector man is aiming to make profit. And so once those services, the citizens cannot do away with the services and they have to consume that services by force, they will charge any price, because whatever price, people will still need their services and therefore they will exploit them. This is partly because This is partly because they are key to the survival of citizens, and it is risky to provide such services on private motive basis, since some citizens may not afford. This includes provision of water, security, health, and education. Have you seen? Imagine these essential services are fully controlled by the private individual without any government intervention. How are the citizens going to benefit from this? Fine, those who are very rich can, access some of these services, but majority of the citizens who cannot afford may be deprived of these services. So these key services, government set up institutions to provide these services just to avoid the exploitation from the private individuals or the private institutions. So fine, because of competition, government might not only take up all that. We have some private institutions also operating schools. We have some private hospitals. We have some private water company that are digging boreholes. These are all in that same lesson. But imagine government has not set up schools. Government has not set up hospitals. Government has not come out with the regulation of this electricity company and water company, and they are allowed to charge realistic prices. Can citizens afford? No. So one other reason is to provide vital services to the state. The next one is to provide affordable services. Of course, some of the services that the private institutions may charge may be so high. So government can come in just to make the price affordable. So for example, transportation. Private individuals were in the the transportation business. Government at a point in time decided to come in with the state transport authority and then the what do you call it? Is it minibus? Metro mass transport. The reason is to reduce, to make the transportation fare affordable, right? So to the setup of the public institutions or public organization is to make the services, provision of those services affordable. The state sometimes intervenes in the provision of some services, basically as a social intervention to provide an affordable alternative to less endowed. We have a lot of people, we have people going into such a field, but government may just come in just to, set up some of those businesses to make the services affordable. Metro Mass Transit Limited may be considered as one of the institutions set up by government just to make transportation fares affordable. It was introduced to help cushion the citizens from high transport costs. Some, though, if you have your money, you can take the what do you call it? The Ford. You can go to the GPRTU, go to your distance. But if you think that you do not have this, you can also fall on the Metro Mass, which is affordable. It ensures the provision of security for states. Some of the government institutions are also set up to just provide security for the state, because security is a very essential issue, very what do you call it? Important issue that we cannot leave in the hands of private. We cannot just let private people provide security for the whole Ghana, right? So because of that, the government institutions like the Ghana Armed Forces, Ghana Navy, Ghana Air Force, and then the police, the what do you call it? Fire service and all that. These are security agencies that have been set up just to provide security for the state. Provision of internal and external security for a country is sensitive and so cannot be left in the hands of private entity. Okay, so we cannot leave it in the hands of the private entity to handle. So the state, through the police and the military, takes over such functions. So the government institution also includes the police service, the military service, the fire service, the immigration and all that. These are all security agencies that government set up just to provide security for the state. Another reason for setting up public sector organization is to provide employment to the citizenry. Though private sector employs majority of the citizens in the country, the government most of the time set up businesses so that it can employ unemployed people in the country. So government set up one of the reasons for setting up government organization might also to provide employment for the citizenry. Unemployment has serious negative consequences for every nation, right? Because if your people are unemployed, it becomes very difficult for the economy to strive. The economy strives when a lot of people have gotten employment. They are working and paying taxes to the country, and the country can get revenue from them to now finance the activities of the government. So unemployment has serious negative consequences for every nation. Key among them is reduction in the economic and empowerment of the citizen, which have implications for the social welfare of the state. Very, very important. If the citizens are not employed, you can know what will happen, because the devil finds work for the idle hand. That's what we have said. The devil, or the devil finds work for the idle hand. So if a young man has finished school and he has to survive and is not getting work, what will he do? So many things will happen. This explains why Galamsey has been at the level that cannot be controlled, because the young man thinks that he has to survive. And if he's not getting work, he can go and dig the pour the water and get gold and sell. Some of them may even want to go into any other means that, robbery, and so many things. If the ladies, if they cannot go into robbery, they can sell their sell their parts for prostitution. All these things are social vices that will occur if employees are the citizens are unemployed. Therefore, government set up some of these public institutions to provide employment for the citizenry. The public sector is key source of employment for the citizens of every nation, especially developing economies like Ghana. The public sector is the major employer for the state. Then another reason for setting up public sector organizations is to bridge inequalities, distribution of wealth of the nation, to bridge inequalities, because some part of the country may be enjoying some benefit while others may not. So to bridge that inequality, driven by profit motive, the private sector may not be interested in serving communities that would not benefit from, that they will not benefit from. Yes. So for example, if establishment of schools are 100% private, government does not come in, who will go and set up a school? What private man will go and set up school in a village at Afam Prince, or a village at Banchasi, a village called Banchasi somewhere? I mean, how many of the students they can get, and how many of the parents can pay the school fees they want to charge? They will not be able to set up. But because government want to bridge that inequality, those in town, they may afford, so private people can say they will get, but those in the villages may not be able to get it. So to bridge this inequality, the government comes in to set up same schools that are in towns, in the villages, so that the inequality can be bridged. Even though inequality still exists, but at least once you can be given a kindergarten and primary school at a particular village, it will serve the purpose than not having at all. So we're saying that driven by private motive, a profit motive, the private sector may not be interested in serving communities that would not benefit, that they would not benefit financially. These communities would then be deprived of some fundamental products and services. If the private sector were to be in charge of provision of water, imagine provision of water and electricity solely, how many of these villages will get water or electricity, etc.? It is possible that many communities would be cut off from the national supply of these basic necessities of life. Eventually, the developmental gap between the rich and the poor would widen. So the public sector addresses these inequalities in the state by providing this, or by setting up these public organizations. Also to maintain law and order. Of course, this can be linked to the police service. So the police service is also set up to actually maintain law and order for the country. So these are the reasons. So we have finished with the session 1. Let's go to session 2. We are looking at the difference and similarities of the private and public institutions. Remember that when we say private institutions, they are those institutions that are set up for profit motive, because any private man set up his business purposely to actually, or set up its organization purposely to generate profit, to make profit. Then public institutions, majority of them are not for profit making, but we have some of them, especially the government business entities, that are supposed to operate for profit, but with some minimal community services, right? So we are going to look at differences and similarities of public and private institutions. Then we'll look at their accounting system as well. So by the time we'll finish going through the session, you should be able to explain the similarities between private sector and the public sector organizations. Then also differentiate between public sector and private sector institutions. So we have the private sector and public sector. Then we have the differences between the public sector and private sector institutions. Then we also talk about the similarities between the public sector and private sector accounting and the difference between them. Right. So by way of introduction, this session, in session 1, we discussed that the part of the economy system, the economic system is made up of the private and the public. And so we said that the part of the economic system that is controlled by the nation, the states, the provincial or regional or local government is what we refer to as the public sector. But that part that is controlled by the private individual definitely is going to be the private sector. So remember, you know that the economic system is made up of public and private sectors. The economic system of every country is made up of public and private sector. The part that is controlled by the nation, the states, the regional, local, provincial, whatever government is what we call the public sector. The parts of the economic system controlled by the private institutions or private individuals is what we call the private sector, definitely. So the private sector is controlled and managed by the private citizens for achieving private objectives, while the public sector is owned and managed by the states for the common good of all citizens. So you see, the economic system is made up of the private and the public. The private sector, we are saying that it is owned by the private citizens for their own private objectives. But the public sector is that part of the economic system owned by the states or the government. The reason is for the common good of all the citizens. Based on these basic definitions, it could be deduced that both the private sector and public sector have identified owners. Have you seen? Once we have the private sector and public sector, we have said that the private sector is that part of the economic system that is owned by the private citizens for their own private objectives. Then the public sector is that part of the economic system that is owned by the state, the country, the regional, local, and provincial government for the common good of all the citizens of that country. Following from these definitions of the private and the public, it shows clear that the private sector has an owner and the public sector has an owner. So in terms of similarity, they both have, they all have ownership. They are resource, whether it is private sector or public sector, both of them are financed. So, but the financing may be different. The public sector may be financed by the public, that is the government, and the private sector may be financed by the private individuals or the citizens, but they all have resource and they are set up for specific objective. They all have a motive to achieve. What is the objective they want to achieve? This notwithstanding, they differ. Even though they all have ownership, they all have motive, they have an objective to achieve, they all have main resource, and they all have those ones, they still differ in so many things. At least on the motives for their establishment, the public sector definitely will be financed or will be set up for the purpose of providing common services to the people. Private sector basically will be set up for profit making. Okay, so these differences create differences in the way private and public sectors are structured. The difference that we are going to see actually creates the difference with which the two are structured, because the motive, the control, monitoring, and things may differ. How they are financed can also be different, and their accountability may also differ. Also, while some private sector entities are subjected to tax, public sector entities are not. Mostly, as for the public sector, most of them are not taxed. So we are going to discuss the differences between the two. The first one, we are going to look at the similarities between public sector and private sector. So even though the public and the private sectors are different, because we have seen that they have similarity, but they differ in so many respects. These sectors have a number of things in common. In fact, their similarities facilitate their peaceful coexistence for the socio-economic development of economy. You see, we are saying that the public sector and private sector differs. However, they have certain things in common. And because of these common characteristics or similarities they have, that has actually facilitated their coexistence in a particular economic system. Because in every economic system, the private sector partner the public sector, or they are partners in building the economy. Therefore, the similarities that they have has actually helped in the coexistence of these two institutions in the socio-economic development of every economy. The public and private sectors are similar in the following areas. One, governance. They all have structures for governance, because be it a private sector or public sector, it has to be it has to be governed. Okay, there must be a board of directors that will see to the day-to-day administration of the affairs of that institution, be it private or public. So governance here, they all have governance structures, even though the structures may differ, but they all have governance structures, right? So the governance structures of both public and private sectors are largely the same. They all have board of similar bodies with oversight responsibilities on the work of management or responsibility bodies. They all stress on proper stewardship and accountability. So if you go to government institutions, the board are set, like university governing board. Every government institution has a governing board. If you come to private institution, they also have governing board. The responsibility of the governing board is to see to the proper administration of the activities of the entity. Okay, so this does not differ. Both boards, whether in private institution or private institution, see to the proper stewardship and accountability of that particular entity. So you see, in terms of governance, they all have governance structures which are similar. That is, board of directors are set up for both private and public institutions to govern the administration of those entities, or to actually, provide oversight responsibility for those management who have been given the power to see to the day-to-day administration of the business or the entities. Right. Then objectives. Each of them has an objective. Whether it is private sector or public sector, they have an objective to achieve. Right. And this objective, so each of them, that is the private or public, has a unique objective for which it was established and has the general public or a section of it as the beneficiary of their services. So whether it is private sector or public sector, there is an objective for which that particular organization or entity has been set up. Okay, so we are saying that each of them has a unique objective for which it was established and has the general public or a section of the or a section of it as the beneficiary of their services. So be it private or public, the institution is set up to provide certain services to either the public, the general public, or a section of the general public. Then provision of employment. Both private and public sector are the one providing employment in every economic system. You know, unemployment in the economy is a very serious consequence for the social development of that economy. Therefore, employment is very important. And here, both public sector and private sector are partners in employment of the people or giving employment to the citizens of the country. So the public and the private sectors of every economy are partners in the provision of employment for the citizenry. Even though in most developing countries like Ghana, the public sector is considered as the main employer, the private sector mostly provides significant employment opportunities, and in some cases, better employment in terms of salaries and conditions of services. Yes. So both the public sector and private sector institutions provide employment for the citizenry, especially in the third world country like Africans. Most of the employment are provided by the government, but the few that are provided by private institutions sometimes do better, pay better than even those that government has employed. For example, myself, as I sit here as a lecturer at the University of Cape Coast, looking at the level of education I have gotten, if I was to find myself in the private sector, amount of money I'll be getting, maybe I'll be a financial controller in a particular renowned company, and the allowances alone might be more than my salary as a lecturer. Have you seen? Yes. So if you're a financial controller of a very big institution in this country, I mean, the benefit, the driver, you'll be giving security, you'll be giving accommodation, a lot of allowances, and aside your salary. I mean, you cannot compare to a lecturer as I sit here employed by the government. So you see, the provision of employment by the private sector, even though in Ghana, mostly the government is the one who employed majority, but the private sector also provide quality employment, right? The record keeping is also another similarity among or between the private sector and the public sector, because both of them records. You need to keep records, whether you are providing services for profit or for whatever motive. You must keep records on your performance and account for what is happening. So both of them keep records and reports on their activities. All sessions, all sectors, whether private or public, keep records of which financial records is a key component. These records are not only supposed to document past events, that is formative ability, but also facilitate future decisions making through their predictive ability. It is expected of these sectors that appropriate reports should be prepared and presented periodically for users. So both private sector or public sector are expected to keep records on their activities and then report to the users periodically, right? So these are the four main areas of similarities between the public sector and the private sector. Now let's look at the differences between the public sector and then the private sector institutions. In spite of the similarities that we have, gone through, the following factors also distinguishes the public sector and the private sector from that of the public sector and its entities from that of the private sector. Like we have seen the similarities, there are also differences. For example, when we come to ownership, there is a difference between ownership of the private sector and the public sector. Of course, the public sector is owned by the states, which we have said already, or the states. Or the state has majority ownership, but the private sector is owned by the private individuals organization, private individuals organization. So what we are saying is that the ownership as a point of distinction may be used to differentiate between the public sector and private sector. So using the ownership as a point of differentiation, we are saying that the public sector is owned by the state, the country, the government of the country, or it is partly owned by the government, or the government has majority, or the state has majority ownership. Especially for some public corporations, we have allowed private individuals to also own shares, like the Ghana Commercial Bank, the National Investment Bank, the Ghana Water Company, what do you call it? That is the company of Ghana. These corporations have some private investors share. So in this case, if you are talking of government ownership of government or public sector, it may also be owned by both government and private. Therefore, they are saying that the ownership of government institutions or the private sector may be owned by the state only, or the state might have a majority share. But for the private sector, when we say some organization is a private institution, it is owned by the private individual or organization with no government share. Then control can also be used as basis to differentiate between public sector and private sector institutions. So for control, we are saying that while public sector entities are controlled by the government, because once it is owned by the government, then it must be controlled by the government or the state. And so it might be controlled by the states and its related agencies. But private sector entities are controlled by the individuals and other non-public institutions that sometimes have minimal government interference. Because some of these private institutions are in the country, and government sometimes have regulations to monitor their affairs, because once they are in the country, they must actually conform to certain government rules. So private sector organizations are controlled, private sector organizations are controlled by the private individuals, but sometimes with some minimal government interference. Yes, because if it comes to the pricing, if it comes to exploiting, government may not sit down for you to just exploit people. So they may come out with certain, for example, we have the laws that governs the affairs of this private institution. For example, the registrar of companies. Is this Security Commission of the Security and Exchange Commission of Ghana? And no, there's an agency by government that actually see to ensure that the private institution conform with the rules of the country. So that one is a minimal government interference. But when it comes to their employment, how they do their things, government has no say in it. Then also motivation for their establishment may differ. The motivation for establishing, even though motivation is a similarity between them, they all have motivation to motive to set up the business or the entity, but this motive may also differ among the two. So the general motive for establishing private organization is for profit, of course. For private institutions, apart from the objectives, the motive here can also be the same as objectives. So the motive for setting up public institution, a private institution, is for profit making. Okay. But the general motive for establishing so we are saying that the general motive for establishing private organization is for profit, even though some government business entities may also have similar motives. Their motive may have minimal government, minimal community services in there. Generally, most public enterprises operate to basically serve the public at the break-even charge or no direct cost. So most of the public entities are established to actually provide services to at least break even for the citizen. So the motive might not necessarily to make profit, but the motive may be to provide that essential services for the people of the country. But however, as they are institution they are operating, they're supposed to break even. So they may have to charge some amount to cover their costs. Means of funding is also a means by differentiating public sector and private sector. How are these institutions financed? Means of funding. So public enterprises are generally funded from the state coffers. That is from the consolidated fund. Most of these public institutions or public enterprises are financed from the state coffers, which is the consolidated fund, with monies from taxes and donor agencies as the main source. So sometimes, apart from the funding from the state coffers, which is the consolidated fund, you may also have some monies from taxes and donor agencies to finance them. But private organizations are funded by the private citizens who establish them or share in organization, share in the ideology of those who establish them. Private enterprises are funded through issues of shares and debentures. So this is very clear. Don't forget some of these things we are discussing. What we say, financing can be a point of distinction between public sector and private sector. When it comes to the public sector, they are mostly funded from the state coffers or from monies from the taxes. Of course, whatever money that we are getting from taxes goes to the consolidated fund, which is the state coffers. And then also donor agencies. Sometimes we can have some donations from other institutions or agencies. But for private sector, they are financed by the private citizens who share in the ideology of those who set up the business. So they are basically financed through issue of shares and debentures. Competition could also differ between public sector and private sector. Why are we saying so? Yes, because competition is very, very important. But in the private sector, there is not much competition. The level of competition in the private sector is different from that of the public sector. So we are saying that competition can also be a point to distinguish between the public sector and private sector. Some public sector organizations face little or no competition, while most private organizations operate in a highly competitive environment. Yes, for example, in the provision of water, electricity company of Ghana Water Company has no competition. The competition they have is only those who are digging borehole and all those things. But basically, they enjoy monopoly. The same way that this company of Ghana, there's no except for those private people who are doing solar panels and then some other means of this. When it comes to electricity provision in the country, it's also monopolized by the electricity company of Ghana. Okay, so there's no competition. Basically, the level of competition in the public sector is low. Most of the things, like even when it comes to schools, the public sector is not, but the government schools are not competing. Unlike the private schools who are trying to buy these things for their distance, so many private sectors do not compete. So competition level at the private sector institutions is very little or no at all. But in the private sector, they are actually, you have to survive in the environment where you are operating. Okay, because where there's profit, a lot of people will come in. Even if you start alone, you are the only one operating, but you are a private individual. Once people get to know that there's profit in that sector, a lot of people will come in to compete with you. So they operate in a highly competitive environment. Survival is also a means of survival. How these institutions survive in terms of going concern is also a means we can use to differentiate, a point we can use to differentiate the public sector and private sector. We are saying that survival is mostly based on political will and the importance of service provided in the public sector. But survival in the private sector is based on financial success. So when it comes to public sector, whether that particular organization is going to continue to operate depends on the political will of the government and how essential that particular services the institution is providing is. So it doesn't matter whether you are making profit or you are not making profit. Once the services you are providing is very essential, the government will get realize that they cannot do away with it. So even if you are making losses, they also have to finance you to operate. Okay? But sometimes when it comes to certain organizations, the continuation, the survival of those companies depends on the political will. When one government comes and they think that this policy or this particular institution that have been set up by the government is not, it doesn't worth it, they will avoid it. For example, the one village, one dam issues here, Kufado government set up many of those district manufacturing organizations. When NDC comes, as they have come now, they think that this sector, there's no need. We do not have to go in. So they can withdraw, their government can withdraw itself in. And so whether those one village, one dam institutions are going to survive or not depends on the political will. For example, this one and the 111 hospitals that they are going to set up. If the government of Ghana, the NDC government think that some places where the hospitals are set up, they are not necessary, then they may not survive. The same way, when the government, NDC government came out with certain schools, that is the e-schools. Some of the e-schools were abandoned in the bush because the next government has no political will to continue them. So the survival of public sector organizations depends on the political will. No matter how it is, it depends on the will of the next government to continue with it, or the services that particular institution is providing is very essential, which the government will have to continue. For example, under President Kufuor, the what do you call it? The PSI, Presidential Initiative organizations that were set up. For example, the is it what do you say? What do you call it? What do you say? Starch company. Now it is no more. It's not functioning. Even though under Akufo-Addo government, the NDC government came, they didn't see to that political work. They think that it's not necessary, so they didn't continue. MPP came, they didn't. So that is the issue. So that could also be. But when it comes to private sector, it's basically the success depends on how you succeed in terms of finance, because your aim is to make profit. So if you go in and you are not making profit, then you die off. So it is not about whether the service is essential or whether you have political. The aim is to make profit to finance your operations to be able to survive, right? Then the basis of promotion of employees can also differ. How we employ employees in the public sector is different from how the private sector will promote its employees. In the private sector, it is about like the seniority and long service. But the private sector, sometimes they look at productivity. It doesn't matter how long you have come here. It is about what you can do. Have you seen? So that is it. In the Ghana Education Service, for example, if you employ a diploma teacher today, the salary he is getting is different from a diploma teacher who has been in the service for 5 years or 10 years. Okay, that person has gotten promotion as a result of long service or seniority. So the public sector is predominantly based on the public sector employees are promoted predominantly based on seniority, while that of private sector is based on outputs. So that is it. Then competition is in work environment. We have already talked about competition here already, but you can also talk of competition in the work environment. You can put those two together. If you're explaining, you there's no need to look at competition for the work environment, and then competition for the business itself. The work environment, there's no competition in the public sector, because people think that for the public sector, it is not your mother, it's not your father's business. There's an adage in Fanti that says that Abajuma Wansuya Ochunazi. I don't know if you understand me. Aban Nejuma Wansuya, like if it is government, well, we don't carry it, we pull it. Have you seen? So this mentality has actually, I mean, in the minds of some of these employees at the government institutions or the public sector institutions. And so the work environment of the private sector is more competitive than that of the public sector, because for the public sector, the thing you are going to be promoted based on long service. When you go to work, as soon as you go to work and you sign, whether you work or not, there's no problem. For example, teachers, most of you teachers here, we have some of the ladies teachers. I'm sorry to mention the ladies. Even some of the male teachers, they are very lazy. They only sit in the staff common room. They will not go to the classroom to teach, because at the end of the day, whether they go to teach and they don't teach, they will be paid. Whether the children perform and they don't perform, they will be paid. So there's no agency in computing, except recently the Ministry of Education tried to maybe rate schools in terms of the performance, and some of the secret supervisors try to kill some of the teachers when the result comes. That you can see that some of the headmasters are trying to, but generally there's no competition in there. But when it comes to private sector, the employees, because they are going to award the best teacher every semester, every discipline, the salary will be increased. When you perform, the salary will be increased. So the GS, for example, and of course, it's also the system that has actually made it so. Because for GS, if there's somebody is a director, all of you can be at the directorship. He can be teaching at class 1. He's a director. He will get the same salary that a director at the secondary school is getting. So there's no competition among the employees, because they are not going to be judged based on output. Because you are not going to be judged based on output, why do you have to compete? Why do you want to aspire to? I mean, some people will even tell you that you are worrying yourself. There was a time when I was teaching the government school at the basic school at Ekunfe. That time I was a new appointed people teacher, and so I wanted to impress. So sometimes when I have given exercise and the students are doing and they are break, I just want to keep them to finish it before they go. Then the women, some of the female ladies who are sitting down, they will tell me, they will just say, oh, you think these children, this thing, what you are doing, they will not listen, they are not listening. That, don't worry yourself. Sometimes when the break time is over, the children are playing football, the teachers are sitting. So I have to just go and ring the bell, drive them inside. You see, because some of them were saying that, now, you see, some of these comments. So that is what it is. Now, let's look at public sector accounting. And then we'll look at public sector accounting, how to compare with the private sector accounting. And then we are looking at, so we are going to look at similarities between public sector accounting and private sector accounting, and then the differences between them as well. Accounting can be explained as the process of collecting, analyzing, recording, summarizing, interpreting financial information for informed citizens by users of financial information. I hope definition of accounting, you don't have problem, because you have already defined, you have done basically at level 300, you have done fundamentals of accounting 1, you have done principles of accounting 1, you might have done principles of accounting 2, and probably you are doing corporate financial reporting. So how to define financial accounting is not a problem. So if by this time you cannot define financial accounting, then I'm afraid you have to go back and read carefully. So we are saying that accounting, as we know from your accounting lessons, is explained as the process of collecting, analyzing, recording, summarizing, and interpreting information for for informed decision by users of the financial information. So this definition the same as we do in the public sector, except that because we are now using the public sector, we will now define this in line of public sector. So the public sector accounting, therefore, is a system of accounting used by officials used by government officials or government institutions to officially collect, analyze, record, summarize, and interpret financial information for users. Have you seen? We have defined financial accounting as the process of collecting, analyzing, recording, summarizing, and interpreting the financial information for users' decision making. When it comes to private sector accounting, public sector accounting, we are saying that it is the system of accounting used by government officials or government institutions to systematically, because accounting is a systematic process. So used by government organizations or government institutions to systematically collect. So it's same as collecting. Collect, analyze, record, summarize, and interpret public sector financial information for users. So underline this particular area. Just underline. If you have the book, you have to underline it nicely so that in your studies you can just underline this nicely or color it. Have you seen?
Hello, sir.
Yes, please.
Sir, please, we don't have the hard copy for the modules.
So
You
when
explained that you will give us soft copy.
So after our discussion, I am going to send you this soft copy, but I'm saying that you can get the hard copy from your center coordinators.
Well, they will not give it to us.
Why?
We've been there begging. Yes, my colleague and I will go and we beg. They don't give it to us. They said it's for the distance learners.
So you are supposed to, okay, so then you do with the soft copy. If you want to have hard copy, go and print it. So I will give you a soft copy here. So if you want it, go and print it. That's all. Right? So this is the definition of public sector accounting. It is a system of accounting used by government officials or government institutions to systematically collect, analyze, record, summarize, and interpret the public sector, public financial information to users. And the issue of the key words that have been explained here to collect, okay, analyze, record, summarize, and interpret. You know them. I'm not going to explain because it's the same explanation as we have in the financial accounting. It ensures, the public sector accounting ensures that public funds are properly accounted for. This involves properly recording government revenue and expenditure, assets and liabilities in an acceptable form for proper audit. Also, it is a system that puts in place adequate internal controls for government resources in order to safeguard them. Public sector accounting, also known as government accounting. So another name for the public sector accounting is what we call government accounting. Learn that for objective purposes and all that. Is the application of accounting principles. So you can also define it this way. It is the application of accounting principles. It is the application of the accounting principles to the preparation and presentation of financial records for government and related institutions for users of public sector accounting information, right? So in Ghana, the public sector reporting is regulated by a number of laws and international public sector accounting standard. we have the International Public Sector Accounting Standard. Remember that for the private financial accounting, it is regulated under by the International Accounting Standard Board. So the similar standards for the public sector is the International Public Sector Accounting Standard, right? So the same standard that we have in the International Accounting Standard, IFRS, the International Financial Reporting Standard, that same standards have their equivalent in the public sector when it's applicable, right? So in Ghana, public sector reporting is regulated by a number of laws and International Public Sector Accounting Standard. And these regulations define the books of accounts to be kept by the public sector, how they are to be kept, audited, reported to users, and in some cases, the penalty for non-compliance. So we are saying that the public sector accounting in Ghana is regulated by a number of laws and then International Public Sector Accounting Standard. And these particular regulations, laws, and standards actually defines the books that the public sector accountant should keep, or the public sector should keep the books that the books of account that they should keep. How this book should be kept, how the records might be done in this book, how reporting is to be done, and in some cases, if you do not comply with those laws and regulations, the penalty for them, which will be done by the public sector, the Public Account Committee of Parliament, and some other institutions. Right. So, need for public sector accounting. Why do we need public sector accounting? Once we have accounting, why do we call public sector accounting? Of course, the public sector accounting will provide reports on management stewardship. People who have been put in charge of managing the public institutions must account for their stewardship, and therefore the need for public sector accounting. Assessment of the performance of the public institutions. Now, if we do not keep accounts, public sector account, we do not keep public sector accounting, or public sector institutions do not keep account of their performances, how are we going to look at their performances, whether they are doing well or not? So the need for public sector accounting, a tool is also to help assess the performance of the public institutions. It will also facilitate auditing of the financial statement of these public sector organizations and projects. Okay, so the various projects that the public sector organizations are undertaking, if proper accounts have been kept on them, it will facilitate the auditing of those statements and the project. Then the need for public sector accounting is also for the useful decision making. Let me power my computer. It is going off. Okay. This thing is low. So let me see if I can put it on charge. Oh, hey, why? All right. So we are talking about the need for public sector accounting. And so I was on the point where I was saying that we need the public sector accounting for useful decision making, like undertaking public investment project. So many of these public organizations or public institutions may be undertaking public investment projects. And so when we have the public sector accounting, it will help us have a useful decision regarding some of those projects, whether those projects are going to be profitable or not. It's also for economic policy formulation and review. Government can use the public sector information from the accounting information or public sector accounting information to actually undertake economic policy review, formulation and review. If government has undertaken policies in terms of maybe educational policies and then costs involved in those things, financial statement we get from the various institutions can help us actually undertake policy formulation and review, and also as a means of sourcing for support from the international development agencies. Once we have the financial statement, we can, for example, if you go to MIF, if you are going to IMF, the Kenofurates IMF, before we can seek support from this international institution, we must actually present our financial reports, okay, government financial reports. So that is it. Now let's look at similarities between the public sector accounting and private sector accounting. Please, if you have any questions, you can ask. As we are moving on, we are going like that. So if you have any questions, you can ask, and then we can address them. Now, both of the private sector accounting and private sector accounting keep financial records in order to account for their stewardship to their users. This is very clear. We even identify this when we are talking about the similarities between the public sector and private sector organizations. They all keep records. So both of the both private sector and private sector keep financial records in order to account for their stewardship to their users. Whether you are in for profit or not, you still have to provide financial reports that will help account for whatever you are doing. Then another similarity between public sector and private sector accounting is both the private and both the public and private sector accounting are based on the double entry principles. Yes, this the basis of accounting, the basic accounting principles, which we call the double entry principle, are applied by both public sector accounting and private sector accounting. There are no differences. Once it's accounting cannot do without double entry principle. Then both forms of accounting stress the need for organization to have an appropriate system for controlling expenditure through preparation of budget and budgetary control. Yes, budget is a tool used in both private sector and public sector. So public sector accounting and private sector accounting use budget as basis for purpose of controlling expenditure. When government entities are operated by states, their regulations are not different from that of the private sector. In other words, they are all required to comply. They are all required to prepare their accounts following international financial reporting standards, that is international accounting standard and all that. So what we are saying is that if the government institution is actually set up for profit making, for example, the corporations, the regulations they use in preparing their accounts is the same. because all public corporations are supposed to use the International Financial Reporting Standard to prepare their account, which is also used by the private sector. So you are saying that when government business entities, and here we have already talked about the government business entities. So when government business entities are operated by the state, like the Electricity Corporation of Ghana, Water Company of Ghana, Ghana Commercial Bank, all those quasi-government business entities, their regulation are not different from the private sector. In other words, they are all supposed to be prepare their accounts following the International Financial Reporting Standard, right? Then the quality of accounting information. The qualitative characteristics of accounting information is similar for both public sector accounting and private sector accounting. I have told you already, because all financial accounting information, whether it is private sector or the public sector, must possess certain qualitative quality. So we are saying that similar qualities of information are required of both public sector accounting and private sector accounting. Remember that we have two main fundamental qualities of accounting information. The two main qualities of accounting information, or two categories of qualitative characteristics of accounting information. We have the fundamental qualities and enhancing qualities. The fundamental qualities, which are the relevance and faithful presentation, and then the enhancing qualities that are the understandability, verifiability, timeliness, comparability, and all those qualitative characteristics is the same for public sector and private sector accounting. Good social citizens. Now, both public sector and private sector supposed to exhibit good corporate social citizens in terms of their financial reporting. Okay, in terms of their financial reporting, the public sector and the private sector must all exhibit good social citizen characteristics. So we are saying that all of these entities, whether it is private sector or public sector, are expected to be socially responsible, so that their activities would not harm the environment in which they operate. Thus, they are required to report on their corporate social responsibility activities in what is termed as social reporting. So social reporting is now a very important aspect of financial reporting. So both private and public organizations are supposed to report as part of their financial statement or financial report their activities on the environment and the society. So they must all show good social citizens by making sure that their activity do not affect the society negatively, and therefore, in reporting, they're supposed to report on their activities on the social. They must report on their corporate social responsibility activities. That is termed as corporate reporting. Now, let's look at the differences as well. The differences between public sector accounting and private sector accounting. In fact, the differences we might have gone through, even in the differences between public sector organizations and private sector. Okay, so we are only relating it to accounts now. So the meaning is, once we say public sector accounting and private sector accounting, if they are the same, we wouldn't have, differentiated them in terms of their names. So it means that their names itself give them the meaning which is different from each other. Okay, so when in terms of the meaning of public sector accounting and private sector accounting, they're saying that it is the accounting system designed for government and related institutions. That is the public sector accounting. While the private sector accounting or commercial accounting is an accounting system kept by all other organizations that are not government and have the intention of operating for profit or engaging in the commercial activities. So that is it. The public sector accounting is an accounting system that is designed for government and its related institutions. So it's an accounting system for reporting activities of government and its related institutions, while the private sector is an accounting system that is carried by other individual organizations that are not government institutions and have the intention have the intention of operating for profit. Then objectives. The objective for public sector accounting definitely might also differ from the private sector accounting. If you look at objectives for differentiation, public sector accounting is designed to serve as a basis for determining the position of a fund. Take note of this. So the public sector accounting is prepared on fund basis. The public sector accounting is prepared on fund basis. Therefore, the objective of preparing public sector accounting is to actually determine the position of a fund. And very soon we are going to go into such funds, okay, consolidated fund, contingency fund, and all those funds. So when you prepare the account, we want to look at the position of the fund. While private sector accounting is meant to determine the profit and loss and the financial position of the entity. Okay, so because public sector accounts are prepared based on fund account, the public sector uses the fund account. The purpose of preparing or the objective of preparing that account is to determine the position of the fund. But private sector, the purpose of preparing that account is to actually determine the profit and loss, which is the financial performance of the business, as well as the financial position of the entity. The basis of reporting, basis of accounting is also different. Now, the basis of accounting, now we are also asking, or the International Public Accounting, Reporting Standard, International Public Accounting Standard is also requesting that government now move from the cash basis to accrual basis. So when that is done, when fully government institutions apply the accrual accounting fully, then there will not be difference between the accounting basis. But currently, there is a difference between the basis of accounting in the public sector and the basis of accounting in the private sector. Let us know that public sector accounting is predominantly based on the cash basis of accounting, even though the International Public Sector Accounting Standard gives them the option to opt. Give them the option to opt either the cash basis or the accrual basis. On the other hand, private sector accounting or the commercial accounting is predominantly based on the accrual basis, even though some statements are based on the cash basis. That is a statement of cash flow. So what we are saying that on the basis of accounting, currently the public sector accounting uses cash basis of accounting, only cash basis. We are going to talk about this, so don't worry yourself about the cash basis and the accrual basis. After the accrual, you should be able to know. But what I'm saying is that the International Public Sector Accounting Standard, which Ghana has adopted, is now making it mandatory for countries to move from the cash basis to accrual basis. So until that is done, there will be differences, or there will be difference between the basis of accounting, because currently the Ghana is using the cash basis in accounting for its public sector accounting. But for private sector, they are using the accrual basis. Remember that the conceptual framework, right? So we shall look at the then approach to accounting. Approach to accounting may also differ from public sector accounting and private sector accounting. What are we saying? The fund system of accounting is common in the public sector accounting. So the approach in public sector accounting is the fund system. The public sector accounting uses the fund system of accounting, which means that when we are accounting, we are trying to looking at accounts. The purpose is to look at the position of the fund. Okay, the fund system. We are looking at the position of the fund. How much money is left in the fund? How much has been spent and all that. But with the public sector, the entity with the private or the entity or proprietorship approach is used. So with the private sector, we use the proprietorship approach. The proprietorship approach here is an approach where we try to look at the performance of that particular business in terms of the profitability, profit and loss account, and a statement of financial position. Okay. Then capital and revenue expenditure could also be a basis to differentiate the public sector and private sector. We are saying that the public sector accounting does not distinguish between capital expenditure and revenue expenditure. Neither do they capitalize capital expenditure. This implies that all capital expenditure are written off in the year in which they are incurred and no depreciation is charged. On the other hand, in the private sector, accounting capitalizes capital expenditure and only write off current expenditure. It therefore provides for depreciation. All what we are saying is that because in the private sector we are using the cash basis of accounting, we only account for amount spent. So all that the cash basis does that at the beginning of the year, how much fund has you been given? How much fund has the institution or the organization been given to operate or to undertake a particular project? At the end of the year, how much fund is left? What is the position of the fund, right? So you are only accounting for how much you have spent and how much you were given. So we do not differentiate between capital expenditure and revenue expenditure. I hope you understand the difference between capital expenditure and revenue expenditure. Revenue expenditure is the expenditure incurred for the activities that expire within one accounting period. Capital expenditure is expenditure incurred on an asset that will be used for more than one accounting period. So if you spend, okay, those recurring expenses are called revenue expenditure. But expenses that are incurred in investing in assets that are going to be used for more than 1 year, we do not write it off within one period. But in public sector accounting, because we are only accounting for how much we have received and how much we have spent, whether the asset is going to be used for more than one accounting period or not, we write it off for the period. Therefore, there's no need for depreciation in public sector accounting because we only account for whatever amount. So if you have bought an asset for the period, how much did you buy? You write it off for the period, and you don't carry, you don't, what do you call it, show it as a fixed asset or whatever to depreciate it. Then when it comes to the private sector, that one, we have to differentiate clearly between revenue expenditure and capital expenditure, because if you do not differentiate between these two, your profit determination will be wrong. Okay? Because if you have bought an asset that is going to be used for let's say 5 years, you cannot write the whole cost of the asset within one accounting period. You may overstate expenses for that period, and that year will seem to be making losses. Meanwhile, it should not be the case. So the accrual concept requires that when you have bought an asset for the period, the part of the asset that has been used for the period should be matched against the revenue for the period. That part that has not been used must be capitalized so that you can write it as a depreciation during the year in which you use it. So for the private sector organizations, depreciation is provided. That is the major difference here. So it does not differentiate. The public sector does not differentiate between revenue and capital expenditure, but public sector organizations or public sector accounting differentiate between revenue expenditure and capital expenditure. I have explained. If you still have problem, you can ask a question. I will explain it more. Then we have regulation, which can also be a difference between public sector and private sector. Of course, the public sector accounting is regulated by the Financial Administration Act of Ghana, regulations, public procurement acts, other related public sector accounting laws. As for public sector, there are so many regulations governing the way the accounts supposed to be prepared. Apart from that, we also have the International Public Sector Accounting Standard, which also regulates the way public sector accounting is prepared. On the contrary, private sector accounting is regulated largely by the International Financial Reporting Standard, International Accounting Standard. Then we have the Companies Code in Ghana, and then the Partnership Acts, other than and other relevant laws. So that is it. That is in terms of the regulation. Now we are finished with the differences between them. Let's now go to unit section 3. That is objectives and uses of general purpose financial statement of the public sector entities. So the public sector accounting, what is the objective for preparing, or what the general objective for public sector accounting? In the private sector, according to the IAS conceptual framework, the objective is to actually provide information about the financial performance and financial position of an entity to a wide range of users to aid their economic decision making. That is the general objective of the financial accounting, but that is a private sector accounting. The purpose is to provide information about the financial performance, financial position to a wide range of an entity or of a corporation, to a wide range of users to aid their economic decision making. But when it comes to public sector, the general objective differs from the private sector, right? We are also going to look at uses of the general purpose financial statement here. Of course, the uses might a bit different from the private sector, but there are similarities between the users of private sector, because for private sector, general public is there. The public sector to the general public is also interested, but we have some key primary users of the public sector information, unlike the private sector. So we are going to look at that. So by the time we finish going through this session 2, you should be able to demonstrate an understanding of the meaning of conceptual framework for general purpose financial reporting of public sector organizations. So we remember that I have talked about the conceptual framework from the International Accounting Standard Board, IASB conceptual framework, which you have dealt with in your Fundamentals of Accounting 1 and Principles of Accounting 1 and 2. But when it comes to public sector, we are also going to talk about the conceptual framework. But here is the conceptual framework from the International Public Accounting Standard Board. Okay, and the content is a bit different from that of the International Conceptual Framework for the International Accounting Standard Board. So we are going to look at, you should be able to demonstrate an understanding of the meaning of the conceptual framework for the general purpose financial reporting of public sector entities, and also explain the objective of the general purpose public sector financial reports, and then identify and explain the information need of users of the general purpose financial reports for the public sector. So that is it. We are going to do the users of accounting information for public sector accounting information and their information need. We are going to look at the content or the meaning of the ISB conceptual international IP is IPSAS Board B. So International Public Sector Accounting Standard Board conceptual framework for public sector accounting. And then we'll look at the purpose of public sector accounting. You should be able to state these things. Now, let's look at the conceptual framework for general purpose financial reporting of the public sector entities. We are saying that concepts are a broad or generic ideas. If you look at accounting, there are certain concepts we have in accounting. It's concept of assets, concept of liability, concept of revenue. These are all concepts. We defined what those concepts represent. Okay, so we are saying that concepts are generally are broad, concepts are generally broad or generic ideas, plans or abstracts that support an activity. So it's a generic idea, or it's a broad idea, or it's a plan or abstract that actually supports an activity we want to undertake. So if we are investing in certain activities and then we say it is an asset, then that asset gives us an idea about what we are doing in terms of what we are talking about. We are purchasing or we are investing money in certain activities, and these activities are bringing us some items, and these items we say asset. So when we say asset, it is a concept in accounting. When we say revenue, activities we are doing and it's generating something, we now give that generic idea about that thing and call it revenue. So there are so many concepts in the accounting, and how do we define those concepts? How do we record that concept? And those things is what we are going to talk about. So we are saying that these plans or abstracts that support an activity, a framework is the basis. When we say framework, it is a basis or it's a basic structure. A framework, when we say framework, once you have a framework, if you are going to build and you want a plan, the plan is the framework. Okay, the plan is the framework of what you are going to do. So we say a framework is the basic structure that supports or underlines an idea. So if you said conceptual framework, then it's the various concepts or the various ideas we have regarding the elements of things we are doing or activities we are doing. We put it in a framework. We put it in a particular structure, and we call that one a conceptual framework. So we are saying that conceptual framework is the basic structure that supports or underlines an idea. Concepts underlines an idea, concept, or system. So conceptual framework could be defined as the theoretical structure of broad ideas that provide the overview or outline or an outline. So we are saying that conceptual framework could be defined as the theoretical structure of broad ideas that provide an overview or outline which underline the preparation and presentation of general purpose financial reports of public sector organizations. Look at what we mean by the definition of conceptual framework. Look at it very carefully. We have defined what is a framework, what is a concept. We have defined what is a framework, and therefore when you put the framework and the concept and the framework together, you have this definition which you can then understand. So conceptual framework could be defined as the theoretical structure of, so I can ask you to define the conceptual framework of public sector accounting. That's what I've underlined. Conceptual framework could be defined as the theoretical structure of broad ideas that provide the overview or outline which underline the preparation and presentation of general reports, financial reports of the public sector. So in the conceptual framework, the various concepts, the various broad idea we are dealing with, we explain and how they're supposed to be dealt with in that framework. It is a theory of public, so the conceptual framework is a theory of public sector accounting prepared by the International Public Sector Accounting Standard Board. So the conceptual framework of public sector accounting is a framework, or it's a theory of public sector accounting that is prepared by the International Public Sector Accounting Standard Board, against which practical public sector accounting problems can be tested objectively. Have you seen? So the preparation of the public sector accounting standard, preparation and presentation of public sector accounting standard is going to be judged, or it can be tested from that framework. The role of the framework is to establish the concepts that underpin general purpose financial reporting by public sector entities. that adapt accrual basis of accounting. You will see for the ISB conceptual frame, International Public Sector Accounting Standard Board, they are advocating for all public sector organizations to adapt accrual accounting basis rather than the cash basis. So the framework actually establishes the concept that underpins the general purpose financial statement by entities that have adapted the accrual basis of accounting. The framework, therefore, establishes the concept that can be applied to developing the international public sector accounting standards. So from the framework, we can develop the international public sector accounting standard and recommend practice guidance. Practice guidance, that is reporting practice guidance, recommended practice guidance that are applicable to the preparation and presentation of general purpose financial reports. So the general purpose financial report, we call it GPFRS, the general purpose financial reports of public sector entities. So the general purpose financial reports are financial reports intended to meet the information needs of users. Okay, so look at what we mean by general purpose financial reports. We are saying that the general purpose financial reports here, I'm sorry. The general purpose financial reports are financial reports intended to meet the information needs of users who are unable to acquire the preparation of financial reports tailored to meet their specific information needs. So when we talk of general purpose financial reports, we are not talking of specific financial reports, individualized financial reports. No. If you prepare general purpose financial reports, it means that the financial reports serve the interests of all the users of financial statements, because most of these users of this general purpose financial statement might not be able to request for tailor-made financial report for themselves. We could have institutions that could ask organizations to prepare financial report purposely for their interests. But at the end of the day, you must be able to, as an organization or as an institution, you must be able to publish an annual report that can serve the interests of all stakeholders, not necessarily tailored to specific interests. But if you want to prepare financial statement for a particular interest group, that one becomes a tailor-made financial report, which is not classified as general purpose financial report. For general purpose financial report, we are saying that it is a report that is intended to meet the information needs of users who are unable to acquire the preparation of financial reports tailor-made to tailored to meet their specific interests. Now, consideration for developing the conceptual framework. Now, when developing the conceptual framework, the International Public Sector Accounting Standard Board consider some other factors, and that's what we are going to talk about here. In the development of the conceptual framework for the general purpose financial statements, the International Public Sector Accounting Standard Board, that is the International IPSASB, considered one, the volume and significance of non-exchange transactions of the public sector. Okay, when we are going to talk about these exchange and non-exchange transactions, okay, so that it will help you understand things. But in developing the conceptual framework, they actually considered the volume and the significance of non-exchange transactions of the public sector. And non-exchange transactions are transactions that are one way. For example, Ghana give grants to Ivory Coast or any other country without equivalent compensation, or we receive donation from other international partners without equivalent consideration for it. once we get services from another company or another country or any entity without giving back the direct exchange, that is non-exchange transfer. For example, citizens of Ghana pay taxes to government. We don't get direct benefit for the taxes we pay. Okay, we don't get direct exchange because as we pay tax, we don't get exact. Even though we get, we expect that as we pay taxes, government provide certain essential services to better our lot in the country as citizens. But that tax we are paying, that service we are getting, that is not an equivalent exchange for our money. If you go to buy something at supermarket, you go to look at the price of the thing, you pick it, you pay. So the value of the thing you have taken is the price is the money you are paying. So it's a direct exchange. That one was an exchange transaction. But if you have paid tax of 200,000 or 10,000 from your salary, and you don't know exact amount of the exact benefit of that, that is non-exchange transaction. So when coming out with the IPSASB conceptual framework, they considered that volume of the non-exchange transaction by the public sector organizations, institutions. Okay, then 2, the importance of approved budget. They also look at approved budget because public sector institutions must work with budget. So what is the difference between the budget made and what the difference between what the budget approved? So this is also considered. Then the nature of public sector programs and longevity of the public sector. So the programs that the public sector organizations are undertaking and how survivor or how long is that corporate public sector is likely to survive is what they consider. Also, they consider the nature and purpose of asset and liability. Now, because the asset and liability in the private sector might be a bit different from the asset and liability in the private sector. So they also consider that one as a basis to develop the framework. And then the regulatory rule of the public sector. A lot of regulations govern the public sector accounts, unlike the private sector. And then the relationship between statistical reporting. These things are some of the factors they considered, the International Public Sector Accounting Standard Board considered when developing their conceptual framework. Now let's look at the purpose or the objective of the general purpose financial reports. The overriding objective of financial reporting to users of the users of the general purpose financial reports, is to facilitate accountability and decision making. So unlike the financial accounting, when we say the overall objective is to provide information about the financial performance and financial position of a corporation, of an entity, to a wide range of users and to aid their decision making. In the public sector financial reporting or the general purpose financial report in the public sector, the overriding objective is to facilitate accountability and decision making regarding that public institution. Okay, we want to determine how accountable that public sector institution has been in providing us that information regarding their activities over the period, and how can these reports help us as users of the public sector account information to make decisions regarding the activities of that public institution. So the basic objective or the overriding objective of public sector financial reporting or the general purpose financial reporting in the public sector is to facilitate accountability and decision making. We are going to go through what we mean by accountability, right? So by the time we finish, you must also be able to define what accountability is. Accountability, even though the entire citizens of a state can be considered as having stakes in the running of public sector entities, it would be impossible for everyone to be involved in every single decision that public sector entity has to make. So the management of public sector entities are entrusted to a few qualified people. It doesn't mean that they are superhuman, but they are the privileged who have been given the chance to now manage the resources on behalf of all of us. All of us own the resources. All of us own the public sector institutions. We all should have managed that institution. But of course, it will be impossible for all of us to involve in the single decision-making of that public sector institution. Therefore, we have to entrust the management of these public institutions to the hands of few privileged ones. And those are the qualified people. Those persons are given the state resources to facilitate the discharge of their responsibilities. So whatever public sector institution mandate or whatever services that they are providing, those who have been put to manage or who have been employed to manage those entities, okay, are resourced from the state coffers to actually discharge those their responsibilities. So that's periodically, managers of these state resources must give account of their responsibility. So once you have been, hello, yes,
Hello.
Maybe me 11 o'clock. Me pumpa masanso aye online presentation to me and no problem. Oh yeah, not a problem. No problem. Right. Yes, I will do that. Okay. Thank you. All right. So sorry for interruption. My wife is concerned. I came here around 7 o'clock. I have not eaten, so he thinks I have to do something. Right. So as we are discussing about accountability. We are saying that all of us, the citizens of the country, has a stake in whatever stake resources that we have or the entities that we have, and it's our money that have been used to set up those businesses. But of course, so we all could have been part in making decisions regarding the management of those resources put in those government institutions or agencies or entities. However, it will not be possible for all how many of us now in the country, about 32 million or 32 million or billion people of Ghana to be involved in the decision making in those public institutions. Therefore, we definitely will have to entrust this responsibility of managing the public fund in the hands of the qualified few people. And so these people that have been put in charge will be given the state resources to then discharge their responsibilities. And therefore, it is imperative that they periodically render account to the citizens of the country about the responsibility entrusted to them. So accountability, therefore, is the process of showing how responsibility assigned to those in charge of management and governance have been discharged within the period of their mandate. So if you have been given 5 years to become a manager, a deputy director of a given, if in Ghana, the government is giving 4-year mandate. So within the 4-year period, how have you been able to discharge your duty? You have to come to account to the people. And then based on that, we can decide, based on those accountability, we can decide whether to still give you the nod to go for the next 4 years or we will vote you out. So that is it. So we are saying that accountability is the process. Listen to the accountability, define it well. Let me just underline it for you. So accountability is the process of showing how responsibilities assigned to those in charge of government governments and governance have discharged within the period of their mandate. Right. It is a justification for action taken in order to discharge one's legitimate responsibility. Now, that accountability is also a justification for action that those who are put in charge have has legitimate responsibility, that they have the legitimate responsibility to undertake such duties. General purpose financial reports facilitate accountability since it helps to report on the performance of any entity in monetary as well as the net worth of an entity at any point in time. So we are saying that the general purpose of the general objective or overriding objective of the general purpose financial statement is to facilitate accountability and decision making. And so we have explained what accountability is, and we are saying that the general purpose financial reports facilitates this accountability since it helps to report on the performance of an entity. Of course, when we think of performance, we are talking of the profit and loss, and in monetary performance of an entity in monetary as well as the net worth. And the net worth is the financial position of an entity at any point in time. This report gives evidence of progress or retrogression, as well as the efficient and effective use of financial resources. So this general purpose financial statement, as we are discussing, when it gives information about the performance of the entity in terms of the money and then the net worth of the entity, this actually this report gives evidence of the progress or progression. We'll be able to, from the general report financial statement, know whether the entity is progressing in terms of the mandate given to them or retrogressing, as well as the efficient and effective use of resources. We'll be able to also know from the financial statement or the general report financial statement whether the company has been efficient and effective in the use of the resources entrusted to them. Accountability actually facilitates decision making. So once the accountability has been done, it then facilitates decision making. Now, what do you mean by decision making here too? Users of general purpose financial reports need financial information for useful decisions. This is not different from what we know from the financial accounting, because the users of financial statements must be able to get relevant information that can help them in making useful decisions. Therefore, we are saying that users of general purpose financial statement need that financial information for useful decisions. Resource providers, the people who have provided their resources, of course, they are going to be one of the key users. For instance, need information on how well their resources are being committed to use in the achievement of the objectives. Unlike the private sector, where the providers of the resource are the shareholders, in the public sector, the resource providers are we, the citizens of the country. Those of us paying tax. If you are not working and you are not paying tax, even though you are not working, you are still paying tax because you buy things that have tax element on them. So maybe you are not working, even the children and these things, once they buy, they all pay tax. So the resource providers are we, the taxpayers in the country. And therefore, we need information on how well these our resources that have been taken from us through taxes and other means have been committed to use in the achievement of the objective of those organizations or government institutions. We also have donors, the bilateral partners or multilateral partners, donor agencies also wants to assess there should be continuity for funding of certain state programs and projects, or they should be curtailed. Those donating to finance certain government projects or giving grants to finance certain government projects may want to know whether they should continue to provide the finance to such projects or they should curtail the provision of those the donation or the financing. What they need, that public sector general purpose financial statement, which will provide for the accountability of those people who have been receiving the donations, to be able to then find out whether they should be able to continue to provide the donation or not. Taxpayers wants to assess whether taxes are collected. Taxpayers wants to assess whether taxes are collected or taxes collected are put to judicious use or not, and whether they should renew the mandate of the politicians or not. So most of the times, we, the taxpayers, mostly want to also assess whether the tax that we have been paying to government has been put to judicious use, or whether the institutions, government institutions or government agencies are using the taxes we have given them judiciously or not. And in that case, we'll be able to decide whether we should renew the mandate of those politicians whom we have given the tax and are not using it well, or using it well or not. You see, so this is a decision area here. So politicians need the information, even the politicians themselves need the information from the general purpose financial statement to decide on how to fund current and future projects. Because the government of Ghana, if they want to continue with, let's say, Agenda 111, or let's say they want to continue with the one district, one factory, or one village, one dam policy, or whatever, they need information about the accountability of how those things have been done, and to see how they should fund, and they should fund current or the future project. Sectoral resource allocation, the various sectors. We want to know how much we should give to the various sectors of the economy, and how well public sector workers are discharging their mandates towards the achievement of the national objective. All these decisions that we may want to make may be made from the accountability of the financial report that the entities are providing. Now let's look at users of the general purpose financial reports. They are basis for assessing the public sector entities. How does the users assess the public sector entities? So the users basis, we are talking of users basis for assessing the public sector entities. Information provided by the general purpose financial report to users are basically for accountability and decision making. We have said already that the overriding objective of general purpose financial reports in the public sector is about accounting, providing accountability and facilitating accountability and decision making. Therefore, we are saying that information provided by the general purpose financial reports to users are basically for accountability and decision making within the framework of the objective for establishing that particular public sector entity. So the accountability will be judged based on the objective for establishing that particular public sector entity. So the financial report given to us, we are going to look whether they have been able to discharge that objective for which that particular public sector sector entity was established, which is more of public service oriented rather than profit making motive. Most of the public sector organizations or that are established are mostly not for profit making. So they are mostly for service oriented rather than profit making. As users assess the public sector entities by the users basis for assessing the public sector entity, they assess them by one, considering whether the public sector entities provide its services to constituents in the cost efficient and cost effective manner. Now, we when we are assessing, the users are assessing the public sector entities, they are assessing them based on their reports to find out whether that entity has been able to provide the services to the citizens of the country in cost-efficient and effective manner. Cost-efficient here has to do with achieving the objective of the entity using given amount of cost based on minimum cost if they have been able to achieve their aim, and given the costs whether they have been able to maximize the objective, that is effectiveness. So in terms of the users assessing the public sector entities, they want to find out whether these public sector institutions or entities have been able to provide the services for which they are established to the constituent. And here the constituent, we are talking of the citizens of the country in cost-efficient and cost-effective manner. Then two, they also assess by ascertaining the resource currently available to meet the future expenditure and the extent of restriction and conditions attached to their use. From the financial statement, the users may want to ascertain the resources currently available to these public sector entities for future expenditure and the extent of the rules regarding the restrictions and conditions attached to their use. Then they also want to assess them by ascertaining the extent to which the burden of future years taxpayer of paying the current service has changed. So they want to assess whether the extent to which the burden of future taxpayers of paying for current service has changed. So if we are paying, we want to know whether the taxpayers, how much we are paying now, is going to change based on the services that the institutions are providing to us. So, for example, if we are paying taxes now to, let's say, provide for certain institutions to manage or to provide certain services, and in their financial report, we see that the percentage of tax has increased. For example, the tax on the petroleum now that we are going to have another institution to now we have increased the tax on liter of petrol to 1 cedi. They want to assess whether the burden on the current taxpayers in future has changed. Okay, that is what they also want to consider. And then they also want to consider whether the entity ability to provide services has improved or has deteriorated. From their financial statements, from the various public sector entities, the users want to assess whether these entities' ability to provide the services has actually improved or deteriorated. So that is the basis for assessing, the user's basis for assessing the public sector entities. Take note of all these things. They are theoretical in nature. I've tried my best to explain them to you, but take note of them if they come in examination, right? Because the good thing is that I'm the one who is going to set the questions. I am likely to give you the areas that are coming and then give you the questions. But per your performance in the last exams, if you don't learn critically, you may not be able to pass well, right? If you get D, it's not a good grade. Users of general purpose financial reporting. So now we are looking at the users of general purpose financial. All these things are in the IPSASB conceptual framework. So let's look at the users of general purpose financial reporting. One of the basic objectives of preparing accounts for the public sector is to enable users of such information to make informed decisions. We know this purpose of financial reports already. The purpose of every financial report is to provide information for the users to aid their decision making. These users are those whose actions and inactions either affect the public sector organization or have the potential to affect the public sector organizations. So when we say accounting users, accounting information users, who are they? They are entities whose action and inaction affect the activities of the financial of the organizations. That is what we are defining who users are. Users of general purpose financial statement are those whose actions and inactions affect the public sector organizations or have the potential to affect the public sector organizations. So that is the definition for public sector accounting, users of public sector accounting information. So take notes. Those are users of public sector accounting information. So we are saying that these users, the public sector accounting information users are users whose action or inaction affect the public sector organization or have the potential to affect public sector organizations. If they decide to withdraw from paying taxes, if they decide to withdraw from financing their government projects, if they decide if they decide not to patronize their services, these are people whose action and inaction affect the performance or operations of the public sector organization or have the potential to affect those organizations. On the other hand, actions or inactions either affect these users. On the other hand, the action or inactions either affect these users or have the potential to affect them. So also we are saying that action or inaction of these public sector organizations may also affect the users. Okay? The action or inaction of the public sector organizations either affect these users or have the potential to affect them. Since public sector organizations serve the public, all interested groups of the public are deemed to be users. Subsequently, the users include, but not limited to, the following. So if you look at what we are saying here, is that every public sector, every financial report, be it public sector or private sector, must serve the interests of the users in aiding their decision making. When we talk of financial users of financial statements or general purpose financial statement, there are those individuals or institutions whose actions and inactions affect the public sector organizations or have the potential to affect the public sector organizations. Also, the actions or inactions of the public sector organizations or institutions will also either affect these same users or have the potential to affect them. So, since public sector organizations serve the interests of the public, all interested groups of the public, all interested groups of the public are deemed to be users. All interested groups of the public, and we are going to talk about those interested groups of the public who are deemed to be users of the public general purpose financial statement. Subsequently, the users include, but not limited to, the following. One, the resource providers. So resource providers are users of because they are the people who are providing their services, they are providing resources to finance the operations of the public sector entities. And so their action or inaction definitely will affect the public sector entities. So these are resource providers, these are those who provide the resources used by the public sector entities, such as the voluntary providers, like donors, the lenders, the creditors, etc., and generally and largely voluntary providers. And these voluntary providers here are the taxpayers. So resource providers are donor agencies, lenders, creditors, and largely the taxpayers. Okay, they are voluntary providers to the public sector entities. We are the resource providers. I'm part and you are part, so we can say we. Then service recipients. They are also users of the general purpose financial statement because their action or inaction will affect the operations of the public sector entities or will have the potential to affect them. So these service recipients are people and institutions that depend on the public sector entities for services. For example, you and me, we are all dependent on the public sector organization for, let's say, provision of water, provision of electricity, provision of so many services, provision of peace and security, provision of law and order, so many facilities we enjoy. And these are services we expect to receive from these public sector entities. So we are users as well. You may be the providers as well as the users of the recipient of the services. Then we have other party, including the government statistician. We have representatives of the service recipients, such as the legislative, including members of parliament. Now, those of us who are taxpayers as well as the service recipients, we may have our representatives who are the members of parliament. That is why the Parliament Account Committee or Public Account Committee of Parliament now stand in our place to assess the performance of these public sector entities in order to make a decision. Okay, so they are also users. The parliamentarians are also users because they are the representatives of the service recipients. Then we have other parties, including the government statistician. Government statistician also needs information from these public institutions to be able to, come out with government statistics that will govern the way the outlook of performance of the period and how government should project going forward. We also have the financial analysts. The analysts, they are also other parties that need the financial report. Media, largely media, financial advisors, public interest, and lobbying groups. All these are other parties who are also users of public sector, general purpose financial reports of the public sector. Then we have the regulatory and oversight bodies like the subcommittee of parliament, which we have I've talked about. That is Parliamentary Select Committee of Public Account Committee of Parliament. We have auditors. Then we have the entities management. The management of the various public sector entities themselves are also users, and then the rating agencies. These are the categories of the users of public sector accounting information. Take note of them. We have how many? 7 of them. 10. 1, 2, 3, 4, 5, 6, 7. So we have 7 of them. You can easily mention them. If even you cannot explain, resource providers, service providers, recipient service, resource providers, service providers, service recipient, representatives of the service recipient, other parties, regulatory and oversight bodies, the entity government, management, and also you can mention them already. So service recipient, we have already explained, I've explained them. The service recipients and their representatives, as well as service providers and their representatives, are considered to be the primary users of public sector primary users of the general purpose financial reports. I hope you have understood that. For objective purposes, some of these things must be at your fingertips. We are saying that among these users of public sector general purpose financial reports, the service recipient and their representatives, as well as the service providers, I think it's supposed to be resource providers, not service providers. Service recipient and their representative, and then resource providers and their representatives are considered to be primary users of public general purpose financial reports because they provide the resources and receive the services. So it's supposed not to be. I can't. This is a PDF, so I can't correct. This one's supposed to be resource providers, not service providers. I hope you have heard me. Hello, are you there?
We are here.
Yes. So I'm saying that change the service provider to resource provider. Okay, when you get it, this one is supposed to be service. It's supposed to be resource providers, not service. Right. So once you know in the private sector in financial accounting, when you know the users of financial statements or the financial reports, you may want to know their information need. In most of the questions that come in the financial report, they will ask you to state the users of accounting information and their information need. In the same way, we also have stated the users of accounting information, general purpose financial reports. What is their information need? The information needed by the service recipients and resource providers for accountability and decision making purposes include performance of they need information to assess the performance of the public sector entities during the reporting period in terms of meeting its resources, in terms of meeting its service delivery and operating and financial services, financial objective, as well as managing the resources under its responsibility and complying with the relevant regulation on resources acquisition and use. They also want information to assess the liquidity, that is the ability to meet current obligation, and solvency, that is the ability to meet the obligation in the long term of the public sector institution. So the users want to find out whether the organizations are liquid in terms of the ability to meet their current obligation, and they are also solvent in terms of the ability to meet the long-term obligations. They also need information to assess the sustainability, that is the financial and operational capacity of the entities, of the public sector entities, service delivery and other operations over the long period, because some of these services that they are providing supposed to continue. So we need to assess whether these companies have that ability to sustain the provision of their services over a long period of time. So that is the information need. They also need information to assess the capacity of the entity to adapt to changing circumstances. Yes, because if an entity cannot adapt to changes, then development in technology and this sense may not benefit them. So the users of accounting information need information from these public sector institutions to assess the capacity of the entities to adapt to changing circumstances such as demographics, national and global economic conditions that may affect its service delivery. Now, for specific information requirement of service recipient may include the following. So take note of the information need. The information need are basically the 5 things here. They are saying that these people need to assess the performance of the businesses. So they need information to assess the performance of the businesses over time. They also need to assess the liquidity position and then long-term solvency of the organizations or entities. Then also they want to see they want to assess the sustainability of the services of the companies over a long-term period, and then also the capacity of the entity to adapt to changing circumstances. So these are their information need. Take note of them. Then we come to specific information requirement of service recipients may include the following. So here, we mean specific information required by the service recipient. One, the entity is using resources economically, efficiently, and effectively. The 3 E's of using public funds. The 3 E's of using public funds: economically, efficiently, and effectively. Okay. So, and as intended, and whether its use is in their best interest. So they want specific information to assess whether the entity is actually using the resources provided to them economically, efficiently, and effectively, as intended, as whether the usage of this resource is in their best interest. They also want information to assess the range, volume, and cost of services provided during the reporting period. Appropriate an amount and source of their cost recovery. So all that we are saying is that the users want specific information from the general purpose financial statement to be able to assess the range, the volume, and cost of services being provided during the reporting period, and whether this is appropriate in amounts, and the source of their costs, the source of their cost recovery is there. Then also they need specific information to assess current levels of taxes and other sources of revenue are sufficient, whether the current level of taxes and other sources of revenue are sufficient to maintain the volume and the quality of services currently provided. Then specific information requirement of resource providers may include the following: in achieving the objective established as the justification for the resource raised during the period. So these are people who provide the resources to finance the activities of the public sector entities. And so they need this specific information for making decisions. One, those specific information to in achieving the objective, so they need information to see whether the entity is achieving the objective established as the justification for the resources that they are raising during the period, and is the entity funding current operations from funds raised in the current period from taxpayers or lenders and other sources. They want to see what other sources of funds that these institutions are raising in financing the operations. They also need information to assess the entities likely need to additional or less resources in future, and the likely source of those sources. So they want to find out whether the entities going forward will need additional funds, or it is even better to cut down the resources we are giving them. And if they need additional funds, what are the likely sources of funds to give them? These are the specific information need from the providers of the resources. The information provided by general purpose financial reports. So information that is provided by the general purpose financial report includes the following. So any general purpose financial report from the public sector institutions includes the following. Unlike the private sector, which we know that the financial report of public sector is made up of the statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flow, and note to the account. For the general purpose financial statement, the following are the information it provides. I hope you know that the comparison I'm making. I've told you the information contained in the financial report of the private sector, that is financial accounting. So financial report of a company in the private sector is made up of the statement of financial position, statement of profit and loss and other comprehensive income, statement of cash flow, statement of changes in equity, and note to the account, if you remember. But for the general purpose financial statement from the public sector organizations, the following are the content or the information it provides. Hope you are following me. So one, financial position. The financial position here almost the same, is similar to that of the private sector, which is the statement of financial position. And it also it gives information about the resources and claims of the public sector entities. Of course, in the statement of financial position, it is made up of the resources and claims. So resources is made up of the assets, and then the claims are the liability and equity. So the same thing here, the statement of financial position in the general purpose financial report is about, it gives information about the resource and claims of the public sector entity. And the resources here is the assets, and the claims are the liability and equity. Then we have the financial performance. And financial performance is also in this situation similar to the profit and loss account we have in the private sector accounting, that is financial accounting. And this, whether it actually gives information as to whether the entity has acquired resources economically, used them efficiently and effectively to achieve its services delivery objective. Then we have the cash flow. You know, cash flow statement, as we have in the private sector, is also here. That statement shows, or the cash flow shows, how the entity raises and uses cash to show its liquidity and solvency position. Then we have the non-financial information, such as the compliance with approved budget, service delivery activities and achievements, and expectation of service delivery and activities in future periods. Non-financial information are supposed to enhance or complement and supplement information contained in the financial statement. So just like the contents of the public financial accounting, financial report, which is the statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flow, and the notes to the account. Here we have the statement of financial position, statement financial performance, cash flow, and non-financial information. The non-financial information here is equivalent to the notes to the account in the private sector. Take note of that. Then we also have budget and compliance. Budget and compliance is a statement with budget and compliance with legislation and other authorities governing the raising and use of resources. This information must also be part of the general purpose financial report. For public sector financial reporting, it has more other reports that are not financial in nature. This is one of them, one of the non-financial reports: budget compliance with legislation and other authorities governing the raising and use of funds. So this is part of the non-financial report that is accompanying the financial statement. And we have told you that these non-financial reports are supposed to enhance, or this non-financial information are supposed to enhance and complement and supplement the information provided in the financial statement. So one of the non-financial report is the budget compliance and legislative and other authority governing the raising of funds. Then we have the service delivery achievements. That is also one of the non-financial reports. Service delivery achievement, these are financial performance of government and other public sector entities, not normally reflected in the financial reports, in the financial result, but in the achievement of their primary objective of providing services to their constituencies. Thus, reporting should include information on well-planned services delivery targets and were met. So, for example, when politicians have done this, they give us reports about their performance. They have to tell us what they set up to do, what they promise in their manifesto, and how they have achieved them, and all this. That one is in the service delivery achievement financial report. Then we have the prospective financial and non-financial information. Most government programs and projects take a long time to complete, or its effect felt by the constituents. Due to this, the financial statement, the financial consequence of certain decisions may not reflect in the current financial statement, but may reflect fully in the future periods. It is important, or it is pertinent for general purpose financial reporting to reflect the forecast financial and non-financial effects of current government decisions with longevity effects. So what we are saying is that is a prospective financial and non-financial information. If we are carrying on activity whose benefits will emerge, will be felt in future, in our financial report, we should be able to predict, or let's say estimate or project the expected cost and benefits of these projects in the future. Then also explanatory information about the major factors underlying the financial and non-financial delivery performance of the entity. So these are the content of the general purpose financial statement, right? We are looking at the basis of accounting. Remember, we have said that in public sector, the basis of accounting is basically cash basis, and in the public sector, it is in the private sector is basically actual basis. But like I said, the International Accounting Standard Board is now has strongly recommend countries that have adopted the International Public Sector Accounting Standard Board to use the accrual concept instead of the cash accrual basis instead of the cash basis in preparing their financial statements. Therefore, we are going to look at this basis of accounting, and sometimes we look at how the accrual basis, the cash basis, and how these two have been blended by some governments in preparing their public sector financial statements. So the International Public Sector Accounting Standard Board allows for the use of both the cash basis in the short term. So in the short term, when you have adopted the International Public Sector Accounting Standard, you are allowed to still continue the use of the cash basis in the short term. And then the accrual basis ultimately going forward should be used. The accrual basis form of financial reporting. So in the short term, because you are transitioning to the use of the accrual basis, you can be using the cash basis. But in the long term, when you have adopted the International Public Sector Accounting Standard, you're supposed to be using the accrual basis ultimately. It is recommended that the adoption of the accrual basis financial reporting be ideally the goal for all public financial reporting. Following from this International Public Sector Accounting Standard Board, following from this International Public Sector Accounting Standard Board has developed standard specifically for countries that continue to use the cash basis of financial reporting, but encourages the voluntary disclosure of the accrual basis information. The International Public Sector Accounting Standard Board is also considering linkage with budgeting, which in many jurisdictions remains on a cash basis, and statistical reporting standards, such as the International Monetary Fund, government government finance statistics and all that. So what we are saying is that International Public Sector Accounting Standard Board is that standard that regulates the preparation of the general purpose financial statement in the public sector in any country that have adopted that standard. But in the meantime, in the short time, it allows for the use of the accrual basis. But going forward in the long time, it expects all countries to adopt the accrual concept. But in this regard, the standard setting body has actually developed a standard to help countries that still use the cash basis and also encourage the voluntary use or the voluntary disclosure of the accrual basis. So some countries are using the cash basis, all right, but will also sometimes disclose some of their this in the accrual basis. So it's like a blend of the two. So then let's look at the accrual basis and the cash basis in perspective and what we mean. For accrual basis, those of you who have done financial accounting and you have all done financial accounting because you are level 300 students, and it is expected that you have done level 100, fundamentals of accounting 1, fundamentals of accounting 2, level 200, principles of accounting 1, financial reporting 1 and 2, all these things you have done. So you know what accrual basis mean. So what we are going to do is by way of reminding you what is it. So accrual basis of accounting is done with the assumption that transactions are recognized when they occur and not when they are paid for. Thus, expenses are looked when they are incurred, or expenses are booked or recorded. You can say expenses are recorded when they are incurred, while revenues are recorded when they are earned and not when monies are paid, the monies are received for them. This concept matches revenue to expenses in the period in which they are earned and incurred, and not when there are actual movement of cash for them. So that is accrual basis. That is what we know in financial accounting. Financial accounting applies the accrual concept as given by the ISB conceptual framework, and therefore it says that revenue are earned when received. Revenue are earned when earned, or revenue are recorded when earned. And earned here means that you have actually have the reasonable assurance of receiving the money, or you have already earned the money by, if it is sales you are making, customers have purchased them, have taken ownership of the asset, possibly have transferred the goods to their premises, and therefore have recognized the liability, and therefore you are to receive that money. When such thing happens, you have earned the money, and therefore you can record it in your financial statement, even if money have not received for them. That is why credit sales are recorded in our financial statement based on the accrual concept. In the same way, expenditures are incurred, are recorded when incurred, and not when money has been paid for it or not. So in the course of doing business, when we have consumed certain services from any other entity and we have incurred liability for them, it doesn't matter whether we have paid for it or not, we include it in our financial statement. That is what we refer to as the accrual concept. So therefore, once we have used that services in generating revenue for the period, whether money has been paid for it or not, it might be matched against that revenue for the period. So it is very simple. The accrual concept says that expenditures are incurred when expenditures are included in the financial statement. Expenditure is included in the financial statement when incurred. And revenues are also included in the financial statement when earned, and not when money has been paid for it or received for it. So that is it. And it's in line with the matching concept, where in preparation of financial performance or profit and loss accounts, we match the revenue earned for the period against the expenditure for the period. And so therefore, if expenditure has been incurred, whether paid for it or not, we match it with the revenue for the period. When revenue has been earned, whether money has been received for it or not, we include in the financial statement. That is it. But this perspective is different from the cash basis. On the contrary to the accrual concept, the cash basis of accounting deals with a holds the view that only the cash effect of transactions is recorded. So it's only when we receive money, we recognize as revenue. When we pay money, we recognize as revenue. Even if we have earned money, but we have not received it, it is not recorded in our financial statement. That is cash basis. So for cash basis, the idea is that, in other words, revenue is recorded when cash is received, and expenditure find their way into the account only when cash is paid. Acquisition of assets, that is capital assets, are recorded as cash outflow. So no matter how much of the cost of the asset, whether it's going to be used for 10 years, whatever years, once we have paid for it, it is considered as an expenditure for the period. This position, so we're saying that acquisition of cash assets are recorded as cash flow when cash is paid and no depreciation is charged on such assets. This position implies that credit transactions would have a delayed effect. Okay, so when you have bought something on a credit and you have not paid, it will have delayed effect on your account because it will not feature in your account. When you have gone to buy services or you have consumed services, you have not paid for it, you will not record it in your financial statement. It will have a delay effect on the account. Even though this basis of accounting is not recorded by the or recommended by the International Public Sector Accounting Standard Board, it is allowed in the short term. I've told you already. So that is the difference between the accrual concept and accrual basis and cash basis of accounting. And we saw that in the difference between public sector accounting and financial sector accounting. So please take notes. This can come in your examination as a theory question, so you should be able to do. Now, by way of illustrating the application of the various accounting bases, let us look at this small illustration and then try to understand ourselves. The figures have been, have been wrong positioned or have been wrongly positioned, but because the model is a PDF document, I cannot correct it, right? So I will tell you as we go through. Now let's look at illustration 1. BL District Assembly is in the business of buying and selling broilers. It's in the business of buying and selling broilers during festivals to support their internally generated funds. During the last Christmas, that is 31st December 2017, the district sold 1,000 broilers for 25,000. The district sold 1,000 broilers for 25,000 in total. Out of the 1,005 broilers, he purchased at 20 cedis per each. All transactions were for cash. Show how the income statement of the district's BA District's Assembly will look like under both the accrual and both the accrual basis and then the cash basis. So remember that under cash basis, we are saying that what we have paid for is what features in the financial statement as the sales. What we have received is what features as the sales, and what we have paid for becomes the payment. Okay, so in the income statement for this year, you are just looking at the sales made against the cost of production. So if we are looking at the cash basis, then the 1,000 broilers that was sold is what we receive. So we receive sales. Our sales for the period will be under the accurate basis, under the accurate basis, under the both accurate basis and then the, what do you call it, the cash basis. Sales in terms of the money we have received is going to be the 25,000, right? Because the sales is 1,000 units at the rate of 25. So 25,000 cedis, both under the accurate basis and then the cash basis. But when it comes to purchases under the accurate basis, we are going to look at the total purchases. That is going to be total purchases here is going to be the 15,000 broilers we bought at the rate of 20 cedis. So that will be purchase is going to be 30,000. So we are going to have 30,000 both under the accurate basis and cash basis as the purchases. But for accurate cash basis, we do not recognize any asset we have. Okay, we are saying that purchases for the period, the amount we have paid is 30,000. What we have received is 25. So there is a loss of 5,000, because if the payment, the receipt for the period is 20,000 and the payment you have made is 5,000, then definitely you have a loss of 5,000. However, you remember that under the cash basis, the delayed sales of the 5,000 stock is going to, actually appear in the next year. But for accurate basis, you must show that same thing in the year 2017. So the closing stock, which is 5,000, will have to subtract it from the total cost of purchase, which is 30,000. So 5,000 times 20 gives you 10,000. 10,000 minus the 30,000 will give you 20,000. If you take the 20,000 from the sales made, we are supposed to generate a profit of 5,000. So the difference is that in the cash basis, we consider the receipt and payment. It doesn't matter whether we have stock at the year end or not. We just look at how much have we received, how much we have paid. But for the accurate concept, we look at the sales, the purchases, less the stock of goods, because the stock does not relate, will relate next year. And so we have no sold for them. So we cannot, include its costs in the current year. So because we have not realized that cost. So we reduce the purchase cost by the 10,000 of the 5,500 stock that is left, and that is 10,000. And so we will have a profit of 5,000. Of course, if you go to the next year, 2018, that 10,000 will also be matched against the 5,000 loss, and the profit will show there, right? So that is the distinction between the accurate concept and the distinct. Now let's move on to the section 5, which is the qualitative characteristics of qualitative characteristics of public sector financial statements. This is the same as we have in the private in the financial accounting. It's already 11:2. I don't know when you are starting your next class. When is your next class starting?
11:30.
Okay, so we can quickly finish the session 4 here, which is similar to the things you know already. Then we can sign off. Next week, we can.
So
Please.
we have not eaten.
We have not eaten, eh? Yeah, I've also not eaten, but we'll finish this one. We'll finish very soon. Small discussion. We'll finish very soon. So we are talking about the qualitative characteristics of public sector financial statement. And as you know, under the financial accounting, every financial statement or financial report must have some qualitative characteristics. Accountants do not produce physical goods. Accountants' value is about the information they provide. So if you're an accountant and you do not provide information that possess some qualities that can be useful, then you yourself, you are useless in the organization as an accountant. So every financial report that accountant provide must have certain qualitative characteristics. And these have been sharply divided into fundamental qualities and enhancing qualities, just as you know under the financial accounting. The first of the fundamental qualities, which has to do with relevance and faithful representation, are the fundamental qualities. So relevance here implies that the financial and non-financial information provided by the public sector institution is capable of making a difference in achieving the objective of the financial reporting. The information is relevant when it has the ability of affecting the decision to be made. So accounting information is relevant when it has direct bearing on the decision to be made by the users. Accounting information is relevant when it can influence the decision-making of users. The inclusion or exclusion of such information will affect the value of the decision to be made by the users. So while we are saying that if information will affect the decision of users, that means that the inclusion or exclusion of that in particular information will affect the decision-making of the users. Such information must be confirmatory. The information, if it has to be relevant, must have confirmatory value. Means that it must help the users to confirm as to what has transpired over the period. It must give them a confirmatory. They should use the information to actually confirm what they are thinking about the business in terms of their performance, in terms of their financial position. It must also help them to predict what the likely value of the business is going to be. So it must have a predictive value if it's going to be relevant. So confirmatory value here means that the financial information conforms or confirms or changes the past or present expectations of the users. For example, the financial and non-financial information, current and prospective, should help validate the financial statement items and their valuation. Then it must also have predictive value. And so here, the predictive value implies that the financial information is capable of assisting the users to forecast future economic condition of the public sector organizations or institutions for accountability and decision-making purposes. So prediction should be made by using trend analysis, confirmatory and predictive rules are integrated. So that is the first one. Then faithful representation. That is also very important quality of accounting information, be it private sector or public sector. It implies that, remember that when we're talking about similarity, we said that both public sector and private sector accounting have qualitative characteristics, the same thing, similarity there. They all have that similarity. So faithful representation here implies that financial and non-financial information portrayed by the public sector account information must portray exactly the financial conditions of the public sector institution it purports to present. It actually must portray or it must purport to represent what it intends to represent. Faithful representation is indeed is deemed to have been achieved when the information is complete, neutral, and free from material error. Completion here is in perspective because when we say completeness is a qualitative characteristic under the faithful presentation. It means that every relevant information must be included in the financial statements. Every relevant information whose omission or misstatement will affect the financial statement being misleading must be included in the financial statement. So it has to do with the materiality with which the informations are captured. It must actually capture whatever happened in the accounting period. That must be included. It must also be neutral if it has to be faithfully presented. Neutrality has to do with avoiding biasness in the financial reporting. Accountant not bringing their subjective judgment in the financial statement. You should report what exactly has happened. Objectivity is what we need here, not subjectivity. So accountants should not be biased in reporting the financial statement, window dressing the account. All these things will not result in faithful representation. Then free from material errors. Here, the financial statement, if it's going to be faithfully represented, it must be free from material errors. Material errors here means that it must be free from inaccuracies. Inaccuracies. You are making mistakes. Instead of adding and subtracting, you just present figures anyhow. When information is like that, it cannot be faithfully represented. So it must be free from material errors, inaccurate calculations, the misapplication of methods and policies, and those things all should be avoided. Faithful representation information does not contain significant omission. So if you are talking of faithful representation, then we should not take away any significant omission. It's not based, it's not biased in nature, neither is it inaccurate. Even though in practice it is difficult to achieve a perfect level of faithful representation, because when it comes to completeness, for example, you cannot say that every little thing supposed to be in the face of the account, because that would be too much. We cannot even know we cannot be content with the volumes of information you are going to get. But you have to look at the materiality of whatever transactions that you are reporting. Remember, so here materiality comes in to qualify what we mean by completeness. So we are saying that even though in practice it is difficult to achieve perfect level of faithful presentation, because general purpose financial reporting should be as complete, neutral, and free from material errors as possible. So we should try. So let me end here, because some of you said you have not eaten. It is 10. Maybe you may have to 10 minutes to go and eat. Next time you come, we'll continue with the enhancing quality, and then we'll finish and continue. Thank you so much for your time and for listening. And I believe that this time you are going to do a good work. You are going to sit on it. This we are discussing is online. I'm not sitting in front of computer. We are not listening. So if you do not imbibe this information and then practically go through the materials and learn them yourself, examination will come and you will not even know whether we discuss this or not. Thank you for your time. If there's any question, any clarification, you can come up with it. If not, I'm just giving you 2 minutes to do so. If not, we can end and you can go and have something to eat before you go for your next class. Thank you very much. So I'm asking if there's any question. Edu?
Sir.
Yes.
For me, I don't have any question this morning.
Okay. Gifty.
Okay.
Yes.
Good morning.
Good morning.
Please, look, when are you going to make available for us the models?
Come again.
I mean, when are you going to make the presentation available to us so that we can print and use?
The book. I'm going to send the book today. I'm going to send it right now.
Thank you, sir.
Okay. All right. So, Afiba. Any question?
No, sir, please.
All right. So then, let me end here. so that you can just go and find something to eat before you go and sit for your next class. Thank you. We'll meet, but we have to still schedule a day aside the normal class, because the normal class will not be enough for public sector. Public sector is plenty. So if we don't have another day in a week, we're not going to finish at all. We won't get anywhere. So
Sir.
I leave it for you to discuss and let me know the dates, the day we can meet for additional tutorials in the group day before the next day, right?
Okay, sir.
Okay. Thank you so much for your time.
Thank you, sir.
You too, sir.